to Trade Live with IG, and it is Chris Beecham with me today.
Good morning.
Yes. What have you done to the Scottish man?
I don't know. Oh, I bumped him off quietly. I don't know where he is either, so, you know.
Producer Phil, where is the Scottish man? He's got man flu, producer Phil says. Well, it doesn't matter because we have David Boise. Morning, early birds, bigger beers. Good morning and happy new week, folks. Coming from bigger beers there. And Crypto Monster as well joining. I don't think we've ever met before, Crypto Monster. Welcome to the show. Away from numbers, good to see you, Neil and Julian as well. Andrew McKilvey. GGP, I hear there's tons of this going on in the Discord chat. Thanks to my Discord producer, James there. Morning as well, Monkey Man. And Dowie Spiders as well. And Carlo, ¿qué tal? Donnie1, another new name here. Lots of new names. Please hit like and subscribe if you are new to the show, because we are going to have a wild ride. Speaking of wild, let's bring up what is coming up today. Right, so first we have overnight action with myself and Chris Beecham, and also we're going to cover the opening bell for you and take you through what is moving the moment we get out the gates. And we've got fast markets to take you across all the big movers across Europe, as well as counting down to all sessions. Then we'll have Matt Arbour live with me here to discuss where the volatility, get that out, and volatility lies in the week ahead, when we've got central bank action, when we've got as well the geopolitical tensions still ongoing there. And a little later in the show, we will also have Axel trade of the week. Right, Chris, how was your weekend?
Busy. We had
What were you up to?
summer fair on Saturday, and then, so that's always nice. It was a lovely day. Saturday.
The weather was incredible, wasn't it?
Yes, yeah, getting warmer, of course.
Really hard to beat when the UK is this...
I know, but the moment it gets about 26, my mother goes, "Oh, I don't like it when it gets warm."
Oh.
It just doesn't cope well in the heat. So.
Does she then start saying that? I can't bear it.
Yeah, we're very much in that. I'm kind of, as it gets towards 30, I fall into that category as well. This week is going to be unpleasant.
Is it?
Well, it's going to be in that direction, so it's going to be quite... In here, it'll obviously be fine when the aircon kicks in, because it doesn't kick in until about 6 a.m. on a Monday, so it's always...
Yes, and then we go to sauna levels again in
yeah,
winter.
it is. And also the problem is trying to cook in this kind of weather is a nightmare, isn't it, really?
For those of you that are watching, Chris Beecham is a dab hand in the kitchen. I too was surprised to hear this, because his shirts are spotless. You know, you never see.
Oh no, this is the one that's covered in sort of cooking stuff.
Speaking of which, plenty to get across. Shall we go to overnight action, guys? Now, I'm going to take you straight into what has been moving and shaking markets since the end of last week. Obviously, still got our eye on, of course, all the market action. We saw big moves on Friday after that tit-for-tat between Israel and Iran, and we're seeing that continue this session as well.
We are really, and intensifying, although, as you can see from the futures, it hasn't really led to more risk off in early trading today. Clearly, it was a shock. It was a surprise to everybody. They were saying the FT had a story on, it was Thursday night, or a very, very early Friday morning, 1 o'clock in the morning, that said Israel to attack Iran as soon as Friday. And I was reading this, and the initial news reports were coming in. So Friday's action caught everybody on the hop, including, it seems, the UK government that wasn't told. The Americans were informed. Clearly, markets are reacting because
they kept mum.
Yes, they did. They're desperately trying to price this in now, really. Most obviously in oil, but to an extent in equity markets as well. The interesting thing, of course, if we could call it interesting, is one word to describe it, but the fact that so far it remains limited. The key questions now for markets are things like, do they attack energy? And they have. There are a couple of attacks on installation so far, but obviously the big one is the Straits of Hormuz. You know, if you know your geography, this is where so much of the world's oil passes through. How easily can the Iranians close it? If they close it, that probably brings the US in definitively, we would suspect. So that, I think, would then be another moment of risk off for stocks, and you'd see oil prices probably head very quickly in the direction of $80 a barrel.
Yeah, totally right. So we've seen this happen so many times before, haven't we, Chris? And
we have.
We're now at the point where, you know, a bit of a respite, and then they look at, you know, what else has been hit, casualties.
Yeah,
as well.
Because we've been here with the tit for tat actions last year. Of course, it was very limited. It was sort of a one and done kind of response. Obviously, Israel at this point has been saying it's a 2-week operation. It will take time. Reports suggest that Israel is trying to bring the Americans in, although so far they're sort of holding off. So there are certain things that could develop from here. This is still a very early stage at the moment. The fact it's gone on as long as this makes it longer than any of the previous actions between the two.
Yeah.
So that we shouldn't be too complacent about the risks for markets at this point. Yes, futures have recovered, particularly Japan and the Hang Seng actually looking very, very strong overnight. So that's interesting. US markets obviously took a bit of a knock on Friday, to say the least. The Dow was down 700. In fact, we were about 1,000 points off 43,000, which we did hit last week. But again, stabilizing. So we'll see where we go from here.
What's also interesting is that I've been watching for any news on the South Pars gas field as well. This is the world's biggest gas field, people, and Israel has, according to Reuters, struck the South Pars gas field. Loads and loads of comments about nuclear facilities as well. Of course, Israel attacking more than 150 targets in Iran, including nuclear facilities. And for those of you wanting to know more about this, just showing you our shorts page. Let's get that up, because we have got 5K views on Joachim Clement that spoke with me on Friday. Trade Live with IG's first 5K views. You can also see that on my Twitter page if you search Twitter Angeline Ong. But he explains what could be the next next step in the whole tit for tat between the two, and why the nuclear attack was flawed. Israel's plan was flawed on Friday, and what was hit, but what was missed more importantly. Let's have a look. Taking that off my chart, we've got Andrea McKilvey chiming in, saying, "And any views on MTRO reports of takeover approach?" We'll get to Greatland Gold as well, because I know that's been heating up on the Discord page. But also, we've got Monkey Man asking Phil, who gets man flu in 25?
Pertinent question. It's not exactly man flu weather.
It's a great question. Some of the other things that are coming up as well is, surprise, surprise, Joachim and I laughed about this on Friday, because there were meant to be nuclear talks between Iran and the US.
Yes, they were scheduled in, and Trump was saying as late as Friday evening they're still scheduled, and the Iranians were saying, no, we're clearly not going to attend. So that's the key thing, isn't it? That the talks have essentially broken down at this point.
Yeah.
Where does it stop, really? Because the worry, of course, is that Israel is clearly, through its actions, established what you might call dominance in the skies over Iran. It means it can strike at will. But the more you push Iran into a corner, the more people will start to worry that some ultimate response is likely. And that's the point at which things go beyond where you can price them in, unfortunately. So this is the problem, that the more essentially you drive Iran into a corner, that the likelihood is it will lash out, really. So again, this is the big risk for oil prices.
Yes.
We are pricing in at this point, going towards 80, maybe even higher. We're not anywhere near the kind of sort of 150, 160 scenario that you might suggest. But don't forget, oil has come down an awfully long way since January as well. So we're already heavily under pressure over the longer term. It might be the cause that OPEC actually then has to increase production significantly, I think, in response. So it might not lead to the price surge people are anticipating. Yeah.
Really. So just whacking this up for you to show you and illustrate what Chris is telling you about. But that's the where it has fallen to since the high seen since March 2022. But if I go on to a 5-minute time frame, you'll see the reaction that we've had recently, and you'll see that at one point we were Across that $76 a barrel mark, it has eased off a bit now, but it still remains relatively high if we're taking a look at the last, few sessions. We also
Infamously, of course, JP Morgan said that oil would go to 185 in the wake of the Ukraine war.
Yeah.
And of course, that was incorrect,
Yes.
shall we say politely. So that was the interesting about the response of oil prices over the course of time, was how weak they were despite this conflict in Ukraine. Now, the question is, how does this new element begin to drive the price?
Yeah.
Again, if OPEC comes into the fray, this could be the opportunity in some ways that OPEC was hoping for, that it gives them the excuse they needed to increase production, because that's what they've been looking for, really, over the past 6 months or so.
Yeah, we want to, untighten the tap. Saudis say no. Saudis say no.
Yeah.
Yeah. That's been happening for some time. We've got plenty else out there as well this week, trader friends. Just in case you thought you might have, just the geopolitics, there's so much else happening. We've got Fed decision.
Central Bank week,
Yeah,
four
central
of them,
bank
to be fair.
Bank of Japan, I think, is the most exciting out of all of them.
And as we were saying beforehand, it's the fact that you've got a world where most people are cutting rates or holding, and yet the Bank of Japan, it is expected to hold rates, but there's a question of how it's going to react to it. We are likely to see inflation rise in Japan, so it's the tapering of its bond purchases as well. So don't forget, monetary policy is more than one element here. We're not dealing just with interest rates. We're also talking about bond purchases. The Bank of Japan, the experts in bond purchasing, the experts in buying everything that isn't nailed down in Japan. What percentage of the equity market is it now, the ETF market in Japan? But reining that in to an extent is also viewed as what they call hawkish monetary policy. So looking to tighten monetary policy to reduce the availability of money, let's put it in sort of basic terms.
The irony is incredible. The Japanese has been dying for the situation for ages, calling out for.
Well,
yes.
Be careful what you wish for.
Exactly.
It's very much the thing. Or at some point they will have to raise interest rates, and I would like to see inflation. No, not this kind of inflation. This is the problem.
Yeah.
Japan, really.
And it wasn't too long ago when my friends in Japan were saying that, the government's just put money into our accounts in the hope of stimulating,
Yes,
shopping.
years and years and years of trying to get inflation.
3 decades?
3 decades, really. And then, of course, they had that. It was just starting to rise about 10 years ago, and then they brought in that sales tax, and it just killed any sign of inflation stone dead.
Yeah.
And so we had to wait another 10 years for something to happen. But it also cut its forecast at the last meeting. So it is concerned. And don't forget, of course, before we forget what else is going on, tariffs, Trump, that still hasn't been resolved.
Yeah.
Trump was in such a good mood over the weekend, he decided to tweet about increasing tariffs because Japan didn't wish him a happy birthday, which he probably found hilarious. I'm not sure the rest of the world did.
No.
But certainly this is the big problem for Japan. It's exporters, how important it is to the Japanese economy. That's why the Nikkei has been, I think, a poorer performer than a lot of other indices over the last few weeks. It really found itself stuck below 39,000. It hasn't really been able to
up the Japan
break up to the upside.
225.
Although you have seen, I suppose, higher lows over the past sort of 2 or 3 weeks. So it is steady, but just not quite enjoying the sort of enthusiasm that we've seen for the likes of the DAX, of course, at new record highs.
Yeah. So just taking a look at the Nikkei there, if you are looking to trade this, there is a, upward trend there in place, but we are seeing consolidation and potentially, do you see a wedge there happening?
Well, you've got to be. A lot of rising wedge patterns being seen on Twitter, on X at the moment. People saying, because if you draw a sharp rising support line, you've got a sloping resistance line. It's a negative wedge, and the implication is that when it breaks out to the downside, as inevitably they say it will, you'll get a big slump. And it looks good. It looks compelling. The market's gone up a lot. It hasn't priced in tariffs. It hasn't priced in recession in the US. So therefore, it needs to go back down again. Markets don't do what you want them to do just because you've drawn a nice line. Not to pick on you there, Ange.
No.
So many people do. I've drawn a line, therefore this will happen. And markets don't care about your line. They don't care about the line I've drawn. You have to be careful of this. Yes, it looks interesting. If it breaks back below 30.
Phil is in my ear going, just draw more lines, and
Yeah,
just draw
more lines must make everything better. It's that illusion of safety that the lines on the chart give you. And Axel would agree with it because it's not just about the lines.
It is about fundamentals.
It is about
well.
fundamentals.
So
It's
they
also
go
about what
hand in hand.
Yeah, it is really. It's what the price is telling you. The price is the most important thing, and the line doesn't mean that it will happen.
I always say it's like driving a car. Chris is like, oh God, she's talking about cars again. Yeah, oh my God.
Sort of a buzzer every time.
Yeah, cars. Oh, she's talking about engines again. Ah, yeah. So it's like having fundamentals are like, you know, how much petrol you got in the car, how much fuel. Yeah, there you go. He's pressing the buzzer now. But I like the lines and technicals, and I'm sure Axel will agree with me as well, because it's like your heads-up display, right? It's your heads-up display.
Yeah.
It's not saying, you know, take hang a right now. It's telling you you could hang a right here.
Yeah, I always
Or you
think.
can hang a right, you know, 5 miles away, because then you're closer to your destination, and you might avoid that big jam that's happening because there's been an accident on the M3.
Maybe. I always think technicals are there to stop you doing stupid things. It's to stop you selling things that are clearly going up. It's to stop you buying things that are clearly still going down. I think that's the way it should reinforce your existing. It should reinforce the fundamentals to an extent, and also reinforce what the price is telling you. Not just, oh, the price is going up, but this indicator I have says it's about to go down, so I'm going to sell it. That's not how these things work. It's not really how they should work, to be fair.
Speaking of that, let's have a look at gold, shall we? Gold.
Always another slightly weaker in early trading. It's another interesting indication, really, that it's not quite the risk-off morning that many people thought we'd get.
Yes.
That you've had gold officially at sort of very close to. I mean, it's, let's call it record highs. I mean, it spiked higher on the 22nd of April, but we're essentially at these highs, really, give or take a couple of dollars. So it doesn't really matter.
Yeah. And it's
very much coming under pressure in early trading.
It is, if we look at the, let's have a look at the 5-minute chart. It is, you know, easing off. But, you know, we could have, you know, any tweet, any sudden retaliation that could move back up to that 3,000.
Yeah, there is the possibility. So we wouldn't be surprised. It's been obviously moving higher anyway all year. It's been the uncertainty trade par excellence all the way through the year. Tariffs obviously giving it that shove it really needed, because it was looking like it was an uptrend in search of a reason to keep going, and tariffs gave it that reason, and now obviously the geopolitical situation has as well. So that means I think you all things being equal, gold continues to rally anyway. But again, this is the, if you want the narrative to support the view, there it is in front of you. It's the current geopolitical situation in the Middle East.
Yeah. So we've talked about Bank of Japan. How about let's talk about Fed? Yeah.
Yes. So
Bank of England as well.
Yes, more holds from the Fed and the Bank of England, maybe for different reasons, I suppose.
97% probability I'm seeing now of rates remaining unchanged from the Fed.
The Fed, yes, almost certainly, and a teeny chance of a hike creeping in for meetings later in the year. But actually, yeah, I think it's still with now 3.3% chance of a cut at this week's meeting. So no change is baked in really until I just think the other side of August.
Yeah.
The September pricing, sorry, currently suggests a 56% chance of a cut at the September meeting. Obviously, when we get more, we'll have more inflation data by that point, so it's a bit of a clearer situation. Yeah, on how the economy is responding to tariffs.
It's going to talk about this all the time, and we are expecting that we are going to see this real, you know, blip up, bounce, if you like, in inflation from the whole, you know, tariffs malarkey coming, especially around the, you know, it starts getting interesting. I've got this Fed Watch tool up here from around September and even, you know, July onwards. Look, September really kind of starts broadening out.
Yeah, because this was the key thing last week's inflation data. There wasn't any inflation. It was weaker than expected. Both the consumer price inflation and the producer price inflation, not as strong as forecast. Still slightly higher than last month, but not as strong as forecast. And it was, tariffs have not shown up in the economy yet. I think if you look back to the previous tariff wars of Trump's creation, it was probably about 3-4 months until it began to show up in the data. So yeah, I think August, September data is when we're going to, if it is going to arrive, that's when it starts to arrive. It'll be interesting to see how markets react at that point.
And I'm getting my ear fill. Let's talking about Phil and lots of chats coming in right now on Bigger Beers saying US holiday Thursday. Thank you for reminding us, Bigger Beers. Jugger also saying, are you guys watching seasonal data for all indices?
Well, yes, I'm a big fan of seasonality. Let me just see if we can fire up the charts on this one.
I think, Chris, you did sell in May and go away recently, didn't you?
No, don't wind me up. The one thing that gets me mad every year, because it's always...
I love winding him up.
I think it doesn't really apply to selling the market. It means just if you're in the industry, it was the time when everyone just left.
To go and... Yeah.
Yeah. And seasonality, what you tend to see...
Early start to the summer holidays.
Yeah, exactly. The market goes sideways in June, July and August. And yes, we do remember August 2008, August 2015, when you had this volatility. So it does happen, and it can happen in August. But it's like Mark Twain said, you know, August is a dangerous time to invest in the stock market. Other dangerous times are September, October, November, December, and so on. So what you tend to see in sell in May is that it just moves sideways, and then obviously you get the usual Q4 rally. 9 times out of 10 it rallies in Q4. Yeah. So you risk just being out of the market just as it starts to recover in late September into year end.
The one that drives me crazy, and lots of people wind me up about it, is I hate it whenever anyone says Santa rally.
Yes, and it gets earlier and earlier every year, of course.
Yeah, it creeps into like...
Let's make a note to mention it to you in September.
Or Christmas, and at one point it was like, oh, October. I mean, like, is this the start of Santa rally? I mean, how early? And you know, all that, as Chris mentioned, it's just a, you know, this could happen more likely, but is not guaranteed to happen.
Then if you look at seasonality in crude oil as well, you tend to get a steady rally over the summer months. So also, how does this play out with the fact that in fact, crude oil usually rallies from March until about September, as they used to call it, the driving season in the US. I don't know if that still applies.
The summer driving season.
Summer driving sounds very 1950s, doesn't it? You know, big American cars, that kind of thing. And then it weakens in October and November. So seasonality is like climate. It tells you what to expect, but it doesn't... It tells you what to expect, but doesn't define what you will get. Does that make sense?
Yes, yes. And a lot of the time I get asked as well about, you know, seasonality to do with, you know, travel as well, the summer flying season, right? We have that. The only thing to consider is, yes, you will have lots of people going on holiday at that time. But yet again, if you have geopolitics pushing the price of oil through the roof, then that is likely to not continue. So it's important to understand what else is happening, what other factors are there. Monkey Man saying Ash more likely to get a rally at East. That's right. Statistically, Monkey Man's got a point, and we've looked at a lot of data here in the last few months. I think it's more likely statistically, not guaranteed, that you get an Easter bunny.
And this is the thing, is you can say it tends to rally in these periods, it tends to go down in these periods. It doesn't mean it will.
Yeah.
This is the thing. The data says historically this is what happens next, but it's not a guarantee. It's not important to stake your entire fortune on a move according to seasonality.
Speaking of guarantee, just very quickly, Bank of England.
Yes,
Guaranteed
number 3 of the week.
To stay.
Guaranteed to stay. Inflation,
that is the feeling, isn't it?
Yeah, and inflation comes, it's still expected to rise, but not as strongly. And don't forget, April's data gets revised down by 10 basis points because of a mistake at the ONS. I think there are a lot of mistakes coming out from the ONS at the moment, which is a bit of a problem. Obviously, wage growth last week was slightly weaker as well, and unemployment is beginning to look quite dicey.
It is starting to look quite dicey, and I'm wondering, you know, at which point is Starmer and Rachel Reeves going to pull the rabbit out of a hat, stealing Monkey Man's Easter comment there, because they've come up with all these different policies, but it's really like tinkering around the edges. You know, when are we going to see this big bazooka to
They don't strike me as people that like to pull rabbits out of hats.
UK economy?
No, it's very hard. I think it's a very small rabbit. I think. There's not much you can do at the moment. Really.
Constrained purse string rabbit.
Yeah, but so also the pressure on, I think, on the Bank of England to move at some point, because, and then you've got the Swiss National Bank, which is interestingly going back to zero.
I know, right? It wasn't such a long time ago when they were first mover.
Yeah.
And then now...
Arguing this is probably a policy mistake. It's probably trying to front run the ECB to an extent, which isn't great, I think, for Swiss inflation. But it's interesting that we are going back to zero.
Right. We're going to have to go to a quick break, but don't go away. Get your coffee, get your tea, get your toast. Monkey Man, finish off your exercises. He does his exercises whilst he watches our show.
Who does?
Monkey Man.
Oh.
Right, we're going to go to guess the chart, people. And Theo van Barthold is getting a prize from me, an IG Prime bag. So if you want a prize too, make sure you guess the chart and beat Phil to getting the answer right. Because if you guys do not get the answer, he gets the bag. Welcome back to the show. Did you manage to get the answer to guess the stock? Producer Phil, drum roll. Whoa, it is Julian. The winner is Julian for saying BAE first. I think you beat Beecham here, didn't you?
You think you might have done, yeah, just slightly. Yeah, a very astute move to get that pun.
Yes, I get that pun.
Spitting fire not to get it right.
Right, you gonna ring the bell for us? Come on.
Oh,
come on. Don't break it, though. Don't break it.
I won't break it.
Rich just saying BAE from my sick bed where I can hardly see numbers on screen.
Oh.
Right. ready.
See, some of them probably guessed it was Rolls-Royce, but you would have been close, but no cigar.
No cigar. Yeah. Ready?
Exploding cigar. Yes, I'm watching my...
5, 4, 3, 2, 1. Here we are, and we are at the gate. Lots of course, action here related to that Israel-Iran conflict, which is a bit of respite, but still, intensifying as attacks starting to show no signs of de-escalation there. However, markets are starting to stabilize slightly. Chris, what do you make of the early picture there?
As expected, early strength in the futures and certainly in European markets as well. So we'll see how well this persists. Friday was a big down day for the Dow. So in some ways, it's not surprising. I think the fact that, as we said, the weekend hasn't seen attacks on energy infrastructure means everyone is slightly calmer about this. From a purely markets perspective, people aren't expecting this to, or the market isn't currently pricing in it spreading dramatically.
Let's have a look at the FTSE, just putting up the losers first. Chris?
So again, it was a strong day for miners and energy on Friday, so it's not surprising to see some weakness coming through. I'll look at why Endeavour Mining is down. I've not seen an RNS on that. I think they were a key riser Friday, actually, from my morning reading. But again, not many RNSs this morning, very slim pickings across the board. We should talk about Metro Bank in a minute, but yeah, not much in the way of decline as GSK, Unilever, coming down. Marks and Spencer, maybe some UK weakness, you can say, coming through here.
Yeah,
A few of these big dividend payers, National Grid, Severn Trent, Poro WPP, flat.
AB Foods as well, also down slightly.
Very much in the news, of course, after last week's poor trading update. So that's one to keep a close eye on, really.
Let's move across to the winners board there. Entain.
Oh, to be fair, the RNSs, they did have one of its subsidiaries, MGM Gaming, has announced an improved performance. So it's one of these wonderful things about trading statements. They're always the shortest, but they always move markets the most, I think, really, because there's so little detail. It's usually everything's going really well or everything's going to hell in a handbasket. And that causes the stock to move much more dramatically. So a big upward move on Entain because you get the unexpected upgrade to performance. Good news for them this morning. And then, of course, Standard Chartered, reflecting, I think, a relatively strong Asian session. I can't get my words out this morning, I apologise.
She sells Shell shares.
Yes, exactly, sorry. And unsurprisingly, BP and Shell, so oil prices obviously still moving there.
Still moving. And also
back to £4 for BP. That's interesting.
Well, yeah, it is interesting indeed. But remember that rhyme, R6Anna always asked me, and why do you say that? Because, it's something that's said amongst closed circles, and especially if people in those circles have either worked for BP or still currently work for BP, sell before 5. Sell before 5 is the saying there. Beware. Like BP and Shell playing catch up there, or the continuation of that upward move because, no surprise because Chevron and Exxon.
Yeah, to watch the oil ones in the US this afternoon as well, see how they react to the situation, really.
We are also seeing the Rolls-Royces up 1% there. Miners, Rio Tinto, Rio's up 0.5% as well. And Diploma, this is one that we didn't look at before, but is quite a fascinating stock in itself.
Remind me what it does.
Price is only up 0.5%, and I believe Andrew McKilvey is also aware of this, that they make protective gear.
Oh, I see. It's one of those companies, it's supplying specialised technical products and services, so you're none the wiser after reading that on what it does.
I like Diploma. You know why? It makes protective gear for everything from, military grade protective gear all the way to firefighters. So it has a very, very strong, diversified portfolio.
Very good runner, but nearly 40 times earnings. That's almost US tech levels.
It is punchy, people. It is
valuation
punchy, especially for a stock that not many people have heard of, right?
No, exactly. I'm sure if you polled the Great British public, they wouldn't have heard of it, and yet
everyone always thinks Diploma. They think education, but it's not. It's it is protective gear. Speaking of protective, loads of other ones that we want to check on as well. Let's cross over to the Germans first. Here we are. We have on the winners list Sartorius, Deutsche Bank, Chris.
Daimler, Rheinmetall, of course. Every time you come to the DAX, isn't it? It's still defence stocks, still so much in vogue. And unsurprisingly, this weekend will have given it a further lift. So we'll be looking for that. Interesting to watch, of course, airliners still after the tragedy of last week, the Air India crash.
Yes,
There'll be a lot more comments on. I think there was an Air India flight diverted back to Hong Kong overnight as well. So people are clearly jittery.
I did a rough calculation yesterday on the way to Tankerton Beach, which I've never been to before. And we were trying to figure out what this one survivor, right? One survivor on that
seat
plane.
11, wasn't it?
11A, well remembered. Trader friends, guess what the percent survival rate was of this one person? I mean, you can do the maths, right? 1 out of 241.
And he was asleep as well.
Yeah, he was asleep. And was his brother next to him? I can't remember. His brother's next to him. 0.4%. And there was a report somewhere saying that they finally got some words out of him. And he said, I opened my eyes, undid my seatbelt, went for the exit. That's all he remembers. Incredible. Incredible. And in a week, I believe it's the Paris Air Show as well. Gosh, that's going to be a wild one.
A lot of European companies was expecting to be able to sell more stuff, essentially in the defence sector over the next few years as defence budgets ramp up across the continent. No, this is one of your favourites, Kering, isn't it?
Yes, yes, Kering is very, very interesting. Phil, I was talking when you spoke my ear. What did you say? Yes. So Kering, just very quickly there, showing you the chart because Kering is up 7%, up 7% at the moment.
Teeny tiny bounce on the long-term chart.
Yes, on the long-term chart. It's been beaten down, beaten down. Look at my chart there, people.
See, that's a good bit of line drawing.
Thank you, thank you.
Example of.
Finally.
It's still telling you.
Monkey Man, you're on my side, right? Andrew McKelvey, finally.
It's just getting cheaper and cheaper, but for a reason, really. It's no sign of a bottom yet in luxury. There's plenty of false dawns along the way, but just not getting better. So spectacular example. Going from Diploma, which I was looking up, has delivered you 22% a year annualized since over 5 years. Kering must be almost the inverse.
Yes, and this is exactly why I say in times of turmoil, uncertainty, especially with luxury, stay with the big ones, people, like Hermes, top end of the luxury scale, because when times are bad, people who have so much money don't have to work, it doesn't matter already. Let's have a look at WTI, because I'm hearing that this, Phil wants me to put this up as well. We talked about this earlier. Brent, of course, moving, spiking in Asian trade before a quick reversal. This is on diplomatic hopes there, but it still remains to be seen, you know, what kind of what kind of diplomacy is actually going to be inked, because Trump has suggested the US might get involved.
Yes, might.
Might is the key word, but not currently considering eliminating the nuclear program. We also.
Well, it's very difficult for the Israelis to do unless the Americans get involved. This is the thing. But if the Americans aren't going to get involved, then it does call into question what's the long-term rationale to this, really.
Yeah. We also have the G7 in view, with the prime ministers of Canada, Ukraine, and Mexico present as well. So keeping that in sight too. And let's have a look at some of the other big movers. Let's cross over now to the French. There we go. France 40 coming up here. I'm going to zoom that in for you. Let's have a look at some of the biggest movers there. We already covered Kering, which is up more than 7%. Some other big luxury names also moving high. They tend to move like sheep, like a herd. LVMH also up 1% there. And Hermes up 0.75%. I have a long position on Hermes, and it's also in my pension. Not that I own anything for Hermes. Actually, I lie. I do own a plate, but
you're right, of course. I mean, Kering down 16% annualized over the last 5 years, and Hermes up 25%. So spectacular value destruction from Kering there over the past 5 years.
Saffron is up 0.2% there. Just looking at the the French space there as well. And we also have Vivendi up slightly. Let's have a look at the losers then.
So as an expert in the sector, though, would you say that Kering might become a takeover target? Is that kind of what we're discussing?
It looks increasingly so. However, the family behind Kering, unlikely to want to let it go. Same story for, name me the company that is the biggest one for outdoor advertising. It's not.
Answers on a postcard, everybody. Please.
It's not WPP. Come on, trader friends, you know this. It's going to come to me.
Is it the French billionaire, the one that paid for Notre Dame? Is that advertising? No. I don't know now.
But biggest. Oh God, this is really
Somebody bail us out at home, please, because I can't. It's just.
Yeah. You know, WPP is the world's biggest by market cap.
Was anyway.
Was, yeah, until Sorrel messed it up big time. But also, Phil, look up the world's biggest company behind outdoor advertising. But Dentsu is biggest in terms of sales.
Yes.
I believe
it's huge companies you've never heard of, but they're everywhere.
They are everywhere. Yes, there's one. Oh. Thank you, JC Decor.
Okay.
Yeah, and so they are owned, still majority owned by the family. This is the thing. There's been so much talk of consolidation within the sector, trader friends, but it's important to understand, who owns the company, and these companies with big families behind them, unlikely to let it go into other hands. Let's have a look at, speaking of M&A and other hands, Tencent, not considering Nexon acquisition. Relics, another one that is...
Relics? I always call it Relks. Is that not what it is?
I call it Relics.
Okay, well, you're probably more of an expert.
What do you guys call it? Do you guys call it Relks or Relics?
Reed Elsevier, as it used to be, of course.
Yes.
Or they decided that an expensive rebrand was the most important thing you could do.
Here we are. So let's have a look at... Yeah, and that was a chart in pain, but just putting this up because it started a $1.5 billion non-discretionary share buyback there. I have to say, not any enthusiasm there at all.
We should do the weekend's M&A story. We should do Metro Bank.
Yeah, let's have a look at Metro.
We've been asked to cover that. So a story in the, was it Sky News over the weekend, or was it the Times? Yeah, Sky News saying High Street lender Metro Bank receives takeover approach. This is Pollen Street Capital, which also owns or has a big holding in Shawbrook. So very much a consolidation in that kind of banking sector. But again, another name to disappear off the UK stock market, because that story's come back again, hasn't it? Really, the last couple of weeks, we had Indivior scrapping its London listing, others that might disappear. Wise. So really not again, these concerns that just London just isn't able to attract companies and indeed retain companies. Yeah, becomes a major problem.
And the other big name is Klarna as well, because Klarna was meant to IPO, and I think they've pulled it off now because of market uncertainty, but also talk about having the IPO here, I'm hearing on the grapevine, is not going to probably happen, and they're looking at New York now. So it is a really difficult space at the moment. We hear this all the time. Not helped by the market environment, really. Who want to IPO right now?
As ever, really, IPOs, again, determined by the weather, really, and the weather is not very propitious at the moment for IPOs. And I can't believe I got the word propitious in at 8:15 in the morning on a Monday, but that's not too bad. I managed to say it properly as well. Indeed, as IPOs, risk appetite for a classic element, really, there. If people's feeling more optimistic about the future, and indeed they were, of course, back in December, now not so much. Tariffs, recession fears are back again, and now this. It's just another thing that means people will look at deciding whether to list and go, actually, no, we'll wait for better times.
And the better times, I've been told as well, because I know quite a few people at Klarna. They were hiring left, right, and centre in January, hiring lots of legal experts. I mean, their legal team was amazing. At one point, I was thinking, the legal team was going to dwarf, their R&D department because they needed all these people to write up for the different parts of Europe, the buy now, pay later sort of structure, right? Legal structure. But now that it's paused, they're saying that they're looking for three things. Like you were talking about the weather, reduce market volatility. They want to see a clearer picture on tariffs and trade policies. Good luck.
Wouldn't we all?
Good luck. Not going to get there anytime soon. And of course, better investor appetite for fintech companies. Right, we're going to go to a quick break and then we'll come back at you with fast markets. Do slam the like and subscribe button and tell us what your biggest movers, biggest trades are today. We'd love to hear them and we will get them across the show.
Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next shiny new thing. Bring me the next.
This is a huge moment for IG and a major milestone in the UK's crypto journey, with retail investors now able to buy, sell and hold 35 crypto assets with a grown-up business. Adoption is rapidly growing, and with UK crypto regulation gathering steam, we want to give existing and future investors a platform where they can trade crypto with clear and transparent fees with a provider already used by hundreds of thousands of retail investors. With the addition of crypto, our customers will enjoy a more streamlined investing experience, with IG now providing a one-stop shop for a wide range of assets. We're really excited to bring this crypto offer to the market.
If you're looking for flexible ways to trade financial markets, whether you're experienced or new to trading, you've come to the right place. CFDs let you speculate on the price of financial instruments like shares, indices, forex, and commodities without actually owning them. You can benefit from both rising and falling prices across 17,000 markets, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going to go down, you sell. When trading CFDs, you're trading on leverage. Now, leverage lets you trade bigger positions with less money up front. So this increases your profits on your trades, but also remember your losses are also amplified, so be sure to manage your risk. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade CFDs with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Welcome to Fast Markets with myself and Chris Beecham. Lots to get you through. Some of the upgrades and downgrades that we haven't talked about just yet. Some of them that came through earlier, but there's so much stuff on the oil markets and the reaction to Iran and Israel that we haven't quite covered it. NatWest. This is according to the FT. A big article saying NatWest must not forget its checkered past.
That's not likely, is it, really?
Yeah, it's very difficult, that. But also, we've got Spectris. We haven't talked about this earlier on, making a bid for equipment maker Spectrus there. We've got VP rated new buy at Shore Capital, price target of 760 pence.
It's a bit punchy.
It is, right? And then we already covered Diploma earlier on, reinstated buy at Investec, price target there 5,660 pence.
Okay.
So you see that 40, you know, they don't think it's punchy.
No, clearly. Well, you can argue maybe it reflects quality of earnings as well. I'm not criticising you, I'm just saying.
Messages on the chat. You want to read through some of them, Chris?
What have we got?
Yeah.
ASML, oh, that's interesting.
Yeah.
We're looking to get long ASML, so just pull up from support. That's always a good one to watch. And of course, semiconductors as well. So that's two that maybe in the same sort of related areas. ASML, one of the great tech stocks that hasn't really lived up to being a tech stock.
No.
Unfortunately, imagine holding this one and thinking that it would do the same as Nvidia, and of course it hasn't.
So disappointing,
Really,
right? Especially when it makes the gear.
Yes.
It really.
It's very exciting when you say ASML, is it really?
No.
And you could certainly purely from a chart perspective, this area just below 80 hasn't been great, really. You know, it gets up to here, and then it drops off again. So that's from a charting perspective, that's the key thing. Break to the upside would be needed if you get it to sort of change the view there.
Yeah.
And if you look at semiconductors, the semiconductors ETF always a good indicator of risk appetite. If you go to SOXX, that's where are we on that at the moment?
And while Chris is getting that up for you, this is what I mean as well. This is a good heads-up display for those of you trading ASML, because you see that perforated line that I've put so that you can see it easier at home. Each time you see it trying to get past that level. You know, we always talk about, you know, triple tops, but in this case, it did not punch through and it continued to move lower. This tells you that there are a lot of bag holders in this space.
Or investors, as they're supposed to call. I don't like the way this crypto terminology sort of crept across
Bag
into
holders.
markets. Not
You know,
bag
you've been
holders, just
holding
investors,
on
really.
to ASML for a long time, and you're thinking, well, you know, at some point, I do want to sell and take profit.
It's like saying Warren Buffett's a bag holder, isn't it? He's a long-term investor.
It's a great graphic image to explain and get the message through straight away. Trader friends, you guys use the term bag holder or not? Let me know here on this chat, please. Let me know, because I would love to know it. Yeah, we often say that you call them candlesticks, but they are actually people, aren't they? It's human behavior.
Well, that's what markets are, isn't it? It's
human
fear and
behaviour.
greed writ large, and that's what you're seeing in front of you every day, really. It's the battle between the two.
Yes.
And sometimes one is in the ascendant, sometimes the other, and sometimes you can really see, you know, the pitched battle being fought out between the two sides in real time. And Friday was probably one of those sessions, really.
Right, so we've already looked at socks there, Jugger, liking socks, saying positive. That's a good one also. I mean, those of you looking at the space and want to come out of, you know, semiconductors, take a look at quantum computing. I know it's very volatile, but have a look at them right now. Trade Live with IG, producer Phil there saying not a fan of the term. Boston Frank, Billy.
Billy, okay. This is the one where I have to talk about stocks I've never heard of.
Billy, let's have a look at that. I have not traded this before, take a look at that daily price action there. Whoa, a lot of gaps.
What is it? What does it do?
Let's have a look. I've not actually heard of this before. US listed shares of Chinese video streaming platform Bilibili
Right.
falling as much. This is 21st of May that I'm reading out here, so this is not today. But it is a Chinese video streaming platform. Let us know if you use Bilibili, because is it like TikTok? Is it like you know? Is it like Instagram? What is the equivalent of Bilibili? Let's have a look at some of the earnings as well, because it is a quiet week, isn't it?
Yes, really nothing on the US front, as you can see. I mean, okay, sorry if you like any of these stocks, but they're not names to inspire news articles, shall we say. Smith & Wesson was the only one I can recognise there off the top of my head. Accenture as well, but that's accountancy, so don't worry about that. UK-wise, though, you've got Whitbread. So the owners of Premier Inn. And not much else these days, of course, because it keeps flogging off parts of the business. But Whitbread, one to watch on the UK front. So let me see if I can pull up the chart. That one. So that's a trading statement on Thursday from them. So be aware, of course.
I really like Whitbread.
Yep.
I like their business model. I like the fact that they've got, you know, food, convenience food, and hotels bolted on. I like the fact that, you know, you see, there's always a saying in the city that if you see, you know, their brands on you know, as you're driving down the road and you see it across the city, it's a picture of confidence, isn't it?
Yeah.
Whitbread as well, I think their pricing, they've got it spot on. Let's come off my chart, people, and we'll have a look at Whitbread a bit closer. Right, so...
Not really a share price that's done much for the past 12 years, unfortunately, that has to be said. Peaked in 2015 and hasn't really ever recovered those levels, although you have seen since 2020. I can't get the longer term history on my chart for some reason, so I might have to
in terms of
prevail upon your good offices.
Divi here, we got 3.5% dividend yield, and in terms of you know, its normalized PE ratio there, just under 13. Market
Not aggressively priced.
No, it's not
Really,
aggressively
not cheap,
priced.
but they're not expecting too much.
Yeah.
Really, which is given the share price performance
Yeah.
in recent years is understandable.
And also Whitbread market cap of just under £5 billion there. But,
Teeny tiny in US terms.
yes, teeny tiny. But you know, for those of you that trade UK stocks and you trade Whitbread, you know, let me know. Speaking of which, it's going to be. I've had messages already from people at the Paris Air Show at the weekend. They were getting ready and all that. It's going to be a belter of a week, given so much going on there. It is starting today at LBG. I can't say that. I'm probably going to kill the name of the airport.
Go on.
Le Bourget.
Le Bourget.
Thank you. Le Bourget Airport. And this is the world's oldest air show that first took place in 1909.
Okay. It was Blairio there, I suppose.
But this event, which is biannual, is going to be huge, not just because of the events that have just transpired over Friday and the weekend between Israel and Iran, but also the fact that, you know, we've had that terrible, terrible crash, Air India as well. The show hosts more than 80 of the world's top aerospace companies. That is more than the Farnborough Air Show. The expectation is that there'll be 2,400 attendees at this year's Paris Air Show.
Big news.
Yeah.
Big events. A chance for people to show off their wares, really.
Yes, yes. And to talk about, this is the list price, but if you buy X amount, then we'll give you a special.
Wheeler dealer at the Paris Air Show.
Yeah.
Maybe go a bit Del Boy
Yeah.
kind of moment.
Yeah, and it always happens, you know, at the very, very start of the show, which is why if you're catching CEOs, you have to catch them on the first day because they make those deals and then they whiz off elsewhere,
Okay.
and then the big parties are on the last day. So
There speaks the voice of experience. Clearly.
I can tell you from experience that they do not like it if you rock up with a camera person who came in a camper van and then casually said, "Oh yes, I do have a gas canister for my camper van," and that person was not seen for the last. Yeah, that was Farnborough. Real story there. But yeah, defense stocks and aerospace. Any of the ones that caught your eye, you know, when you saw the news hitting the headlines on Friday?
Sorry?
Any particular stocks that you...
Friday was slim pickings. I suppose you had... Ashted was certainly in the moves, I think, because they're reporting tomorrow. So that's one certainly in focus this week. Because interesting, because the UK stock, obviously a very big US business. So I think that's one to watch to see how that one's kind of sort of proxy on US economic growth, really.
Yeah. Let's take a look at Ashted on a weekly chart, because it's not done too well, has it?
No, unfortunately, being tied to the US has not been a great place to be, really. It's taken an awful knock in terms of its share price since December, even before the tariffs, actually. So it had a poor set of numbers coming through in December, which really sort of change the view here. But I mean, I can't get the longer term chart on this one. So
Yeah.
it was previously a very, very good performer. We
It
could
was,
always
but
rely
look
on
at
Ashton,
that.
but
December
not giving the data I
2024. My goodness, that gap down was huge. Back in
forward, hang on.
December 2024. You know, looking at some of the, you know, systems on display there, just going to whack up one for you, if I may. I hate how these companies keep changing their names, because Raytheon's changed its name, hasn't it?
Is it?
Like it has. Yeah. And let's have a look at Dassault as well. Dassault systems. Do we say the S at the end of Dassault? Here we are. Dassault, taking a look at that, and Dassault Aviation as well. Of course, the one that, the key one to look out for at the Paris Car Show and the Farnborough Air Show is the Dassault Aviation Rafale. They're the ones that create all these superb systems that help with missile technology.
Oh, yes, you're right. Raytheon is now RTX.
Yes,
To make
thank
life
you.
easier.
Yeah, I knew they changed their name. It's really, really, I hate it when they do that, because it just, everyone remembers them as Raytheon. No one says RTX.
Well, to be fair, it was 2 years ago, but I didn't know. So.
Have a look at RTX there, because RTX is one that has been moving higher, as you can see.
Very,
there.
very strong performance there. You'd expect a lot of companies to go shopping, and it helps being a US stock. Really, the negativity around the US.
Yeah.
It walloped and then it rebounded.
Yeah. Changing gears, because we need to look at the commodities space as well. Just check in on silver and then gold. Silver is up 0.5% there, as you heard me say on Friday, and with Dylan Rattigan as well. Silver tends to play catch up when it comes to, and it's far more volatile when it comes to between gold and silver.
But likely to be a bit more and more popular, given how expensive gold is in sheer dollar terms as well.
Yeah.
I just think it just gives silver a bit of a boost. And it's been a very, very good performer. In 2020, you've got to get it for $15 a share. Again, I'm doing my this is what you should have done 5 years ago routine. I apologise.
Hindsight is a beautiful thing.
Hindsight is the best performing hedge fund. But yes, still a very strong uptrend. So no reason to suspect it's going to take a bit of a knock.
Yeah, loads of our trader friends trade silver. Any of you trade silver as opposed to gold? Let us know here. Talking about gold, let's have a look at that, because Andrew McKilvey joining the chat here. I know we're getting to Greatland Gold soon. Here we are. Gold there, as we said earlier with Chris, you know, it has eased off a bit, but really still marching towards that 3,500 psychological level there. Just giving you the close view there. Very quickly, because Andrew McKilvey is on the chat there. I was expecting the California fires would lift AHG
Yes,
on
it's not
rebuilding.
really come through, has it, really?
Not.
So it's interesting that the story just hasn't resonated, really.
Yeah.
But being a US stock, I think, is just people don't want to own US stocks because you see the big outflows. So unfortunately, Ashted, despite being FTSE listed, has taken that nasty knock there.
Yes, yes. Right, we have to head off now. It's been a pleasure having you on.
very much.
As always, because we've got Matt waiting in the wings for us to talk about volatility and how that's shaping up in the week ahead. Stay with us and press that like and subscribe button. All you new people, it's in between here. It's really easy. It's between myself and Chris. Press that button and share this with your friends. We'll be back with Matt Arbour.
Bring me the next shiny new thing. Bring me the next shiny new thing.
So today we're on set filming our latest ad campaign for IG Invest. IG Invest is the latest innovation from IG. It's aimed at those who are interested in investing or maybe have a bit of knowledge but want to become more experienced. And what we've done is created a really beautiful, easy to use app, and now we've got to publicise it, and that's what we're doing today and trying to capture. So we worked on this ad campaign with Otherway, who are our creative agency. And what we really wanted to do is think about breaking down the barriers to investing. And so we wanted to think of an idea that was playful, fun, but also inspired empowerment.
So essentially, look, a lot of financial advertising can be quite dry, a little bit kind of wallpapery. And I think the idea was just to create something that was really eye-catching and kind of use that distinctive IG red, but put it in this really interesting metaphorical space where investors felt really kind of calm and kind of very effortless in what they're doing.
So my work is colorful, it's poppy, it's quite surreal, and I think this is one of the projects that is a perfect match. It's really nice to have a company that's very brave in their approach, and I think as a creative, as a potential target audience of the whole thing, I think it's going to work very well.
There are too many people to name who've worked on this project. You know, at IG, it's really important that we move at pace whilst delivering really high quality work. So we've had to have the best brains in the business on this one, and we really hope that you like the result.
It's been a real pleasure working with IG. I think ultimately as a brand, they're really keen to push things and kind of take the financial kind of advertising space somewhere slightly more interesting. So it's been a real joy for us to work with them and help them kind of get there on their journey.
tastylive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante. tastylive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
This is a huge moment for IG and a major milestone in the UK's crypto journey, with retail investors now able to buy, sell and hold 35 crypto assets with a grown-up business. Adoption is rapidly growing, and with UK crypto regulation gathering steam, we want to give existing and future investors a platform where they can trade crypto with clear and transparent fees, with a provider already used by hundreds of thousands of retail investors. With the addition of crypto, our customers will enjoy a more streamlined investing experience, with IG now providing a one-stop shop for a wide range of assets. We're really excited to bring this crypto offer to the market.
Hey, welcome back to Live from Trade Desk with Matt Arber, and he is here with us to talk about all things volatility and how it's going to shape up this week.
Well, kind of rather the lack of volatility this morning. The lack of volatility.
Asia had the fun.
Well, Asia
had the action.
Asia were very excited, weren't they? Asia got very excited about oil, and looking this morning, Yeah, nothing really happened.
Look at it now. It's eased off even more. I'm just showing you oil here, trader friends. I mean, we had at least a move when Chris was here, but now it's turned flat.
Oil flat. US futures up slightly. European futures up slightly. It's I suppose it's this often the feeling that conflict in the Middle East doesn't really seem to resonate as much with Western markets as perhaps people think it might do, until of course things escalate out of control. We often see this sort of little risk priced in, and then suddenly, oh, actually it's worse than we expected.
Yeah.
But just headline volatilities this morning, I was struck. US volatility headline on the S&P.
Yeah. There we go.
Decent move on Friday, but
which contract?
Just to look at a daily for today. So
we're at 19.
Fairly exactly less than 20% after we had that big move on Friday. Yes, there no US numbers today.
Yeah.
It's a quiet day news-wise, but
this is the incredible thing, right? We talk about this all the time here. Tariff tweet by Trump. We see a much bigger jump.
Completely.
In volatility compared to
macro event.
Yeah.
Global
drones,
disturbance. Yes.
Missiles, right? Global disturbance. That's
Nuclear powers.
And so it is something to behold here. Let's have a look further out then, taking the next weekly expiry there. And yeah, see, it's still around 20.
Exactly, and those at the money straddles. It's a Wednesday. There's like 32 S&P points on the straddle. That's not suggesting a huge amount of volatility. That's a single mention of tariffs, and we see the algos drive the S&P 30 points. So it's an interesting one as to kind of how the market doesn't feel this has a near risk. I suppose there's a tail risk in there somewhere, but that near risk that this is something that's going to cause sharp moves in European and US indices.
That's right.
At the moment, yes, that is perhaps a slow burning story.
Do we want to look at a European one? Should we choose Germany 40?
Yeah, Germany 40 vol. It's a bit hard, but there we can see an at the money straddle of about 150 points. So again, not excessive volatility. That's kind of a normal day's move on the DAX at the moment.
So Boise, they're saying crazy. I take it, Boise, you're talking about the volatility and not the fact that Matthew M. Stervick, welcome Matthew, all the way from Jersey in USA. My goodness, do you not need to sleep?
No one's talking about volatility, Ange. They're talking about how you can buy Bitcoin in a UK listed company and trade on a whatever 5x premium or whatever the premium is these days on this SV, so I won't even say its name. SV, whatever it is.
Not aware.
Yeah, that's everyone's very excited about, and well done if you got in at 7p.
You saw my thunder. I was going to get down to that. Get down to IDAR. I was working from the top.
Okay. I almost come bottom up kind of guy.
Oh, you're a bottom? Oh my goodness me, 8:42. Good thing it's not 8:42 p.m. in a pub somewhere. Speaking of which, volatility, the fact that we are also, seeing this lack of volatility, shall we call it, do you think it's because of the fact that we haven't seen any heightened aggression, or is it because the respite comes because we're expecting some sort of involvement, perhaps from the US, perhaps something out of maybe even G7 that might fray the nerves slightly?
Well, yeah, I think the expectation is that whilst the G7 are sat there and meeting, nothing is going to escalate beyond. We're trading, that blows being traded, but there is no step up in escalation. The news reports that Israel were told they couldn't kill the Ayatollah is, the better the devil you know theory, and that there's still influence coming through. This isn't going on perhaps without the US being tacitly aware of what was planned. So I think that's perhaps dampening some of the perhaps shock value that the market's perceiving. Yes, it was a shock we saw on Friday. The market hadn't expected the escalation, but actually, you know, with time to consider, it's perhaps sort of, I don't know, it's terrible to say business as usual in the region, but sort of no new blows being traded.
Taking a look at the S&P as well, trader friends, because not only is it light on the calendar this week, but also, you know, despite those hostilities, Deutsche Bank, let me know what you think about this, trader friends, and also Matt, Deutsche Bank saying typical Israel-Iran conflict pattern shows 6% S&P pullback in 3 weeks, followed by a recovery. What do you think?
I don't know. I don't know what to make of a Deutsche Bank research now. It's interesting if that's the case. I don't know. I don't know where they're putting that data from. S&P this week, interesting. We've got Juneteenth on Thursday, and then
thank you, Bigger Beers, reminding us here that Ange can have a bit of a break, whilst, you know, respite for Ange, because hopefully Rich will be back in fine form by then. But yeah,
I was going to say we've got a US holiday on Thursday, and then quarterly options expiry, the June expiry on the S&P on Friday, which, you know, generally is a bit more interesting when a market's trading near its recent highs or recent lows. Often, you know, it used to be the case that one saw a decent pop or a decent squeeze into recent highs. So that'd be an interesting expiry to watch, I'd have said, on Friday for those holders of June options.
Are you going to be there at the Friday event?
The Friday event.
The options event with Tom Sosnoff, with Bat, Anthony Batista all the way from Chicago, and Rich McDonald as well. I will be there, trader friends.
Stella Bill, I don't think I could match those names that are appearing. Good Lord, I'll be like the support acts on.
If you want me to bring Matt Arbour, if you want to meet the legend, I will do my best to bring him on. Thank you, producer Phil, for whacking in the eventbrite.com link. Please come and join us. Very prescient, producer Phil. That nano chip that I've implanted behind his ear is working. I just need him to drive my technology, then all will be good, because he keeps still saying F11 to me. Arthur Fox Haig saying, he says, it makes no sense. You're paying 10 times as much for an investment to avoid the chance of the underlying asset being too volatile to hold outright yourself. Those of you that hold this, those of you that don't, you know who you are. Take this on the chat, but don't forget to hit the like and subscribe button. Otherwise, you don't have this platform.
I don't have this
platform. Yes, to have your argy-bargy in. And it's all about discussing different views so you get a different perspective. And that's what makes a better trade.
Well, and that's what makes a market, of course.
It's also what makes a market. But I like to know, like, I marched over on Friday, and I wanted to get the view on volatility and also talk about some internal volatility. But was Matt interested?
On Friday, I wasn't in the office.
Was it Thursday?
Thursday. It was Thursday.
Yeah, Thursday. They're getting on my chat saying something's going to happen.
Bigger problems to deal with.
Something's going to happen. And he was just, I can't talk to you right now. And I was insulted. Never have I been so insulted in my life.
I don't believe that.
It was the Iron Dome of hair. It was the Iron Dome of hair. And he was just, but Andrew, Steve Davies says, just picked up some more GGR and at Kate, my AVESP, I'm going to average. Is that...
I don't know what GGR is.
GGR, Great Land Gold, let's bring that up. There we are. Let's take off that Ichimoku cloud just so you can see the price action a bit better. Here we are.
Okay. Actual gold rather than the new gold of crypto.
Yes, this is proper gold here. You know, it has
a lot of similarities with small cap crypto vehicles.
Yeah.
By the rumor, and then get out before the fact.
Yeah, and also the thing with Greatland Gold is that it has not just exposure to Australia. But it also has, was it Tanzania or someplace that started with T, but more so exposure to Australia. We had Joachim and Simon Popple, who delves into gold, and we talked about Greatland Gold as well for Andrew McKilvey, and the fact that it has this Telfer mine over in Australia. And Simon Popple said he saw great opportunity. Thank you. Tasmania. I knew it was T somewhere. T. Tasmania.
Which is in Australia.
In Australia. Thank you. Thank you. I concur with Simon. I think that this is a good one to watch, especially when Simon said there's going to be good demand for its ASX.
If Simon says something, you know to do it, don't you?
Well, Simon's been in the market for a very long time.
That's what Simon says, Jake.
I know.
Okay.
But also, I have actually been, I've lived in Australia. I've been to some mines there.
Have you panned for gold?
They make every single tourist do that. And because I wasn't a tourist there, I just watched them for free because I wasn't going to pay for that.
Yeah.
I was there studying for my sins. My parents sent me somewhere where I couldn't possibly get into trouble.
Sent to Tasmania?
No, not Tasmania, worse. Tasmania would have been exciting.
Where were you sent?
Trader friends. Tasmania, look at me. I'm taking a look at YouTube chat because you're going to either disagree or agree with me. Tasmania would have been interesting. No, they sent me to Canberra.
Canberra, oh, good Lord.
Yes, thank you.
Yes.
Where there were more kangaroos on my campus than humans. Thank you. So that's why I also think that, I concur. Not because of what Simon says, nice pun, but yeah. Speaking of which, the loads of trader friends coming online asking about, what, if any volatility signals surrounding the great central bank week that we are headed into.
The great central bank week.
We've got Fed, Bank of Japan.
Yeah, well, again, Bank of Japan leading us off tomorrow. Dollar yen vol for overnight looking particularly subdued, given it's a Bank of Japan. Recent bodge events we've seen an overnight dollar yen vol sort of
Bringing up the economic calendar.
High 20s, 30. I think it looked this morning, and we're barely nudging 20. So the Bank of Japan, which has been where a lot of the interest was earlier in the year, as we saw, shoots of inflation in Japan, and this, in that sort of macro structure on global bonds, that as JGBs start to become more attractive and start paying a yield, you see the shift out of treasuries and European bonds back into Japan, and that was sort of part of the unrest, the jitters in the bond market kicked off by that. But this Bank of Japan looks like it's going to be a pretty benign one, with nothing unexpected there, or certainly FX markets not pricing in anything unexpected. The Fed's what it is. I'm sure Jerome will have something to say. He won't necessarily do anything.
I think he'll sit quietly and hold his cards close to his chest, right? Because it's worked out for him so far.
Well, yes, he probably doesn't want to get involved in a trade of insults with Donald, does he?
Not, yeah. I mean,
it doesn't suit. And then the BOE, which is, is the interesting one. Where do UK rates go? All the data has been pretty negative. Yeah. I
was going to say piss poor, but
you can't.
We'll do it with negative. I can't say that.
Yeah, exactly.
Negative.
Pretty negative.
Yeah, the jobs data was
nothing looking good there. No.
There's no chink of light, is there?
No, definitely not. Definitely
I can see.
And it's the jobs data that is terrible, rather than anything else. Inflation is still there, and the jobs aren't there. It's
all of that data just saying to me, suggesting, in my humble opinion, of course, we do not give trading advice here, but all that weak data just suggesting to me that UK house builders and the like, consumer names like your M&S and all that, still going to have a rocky time ahead, right? So if you're looking for something to short, that is something for you there. We also have Whitbread out tonight.
House builders are a bit different, because at some point, houses do need to be built. The government has to start, pushing out that supply part of the chain.
They do, but also until rates come down enough for momentum, right? People to feel confident enough to buy and sell again, we're going to have this downward pressure, right? So they may have to build at some point.
It's a difficult world, isn't it? If you're talking with house prices, because everybody would like house prices to be cheaper. People would say they want the house. All the buyers want house prices to be cheaper, obviously. But you need the increased supply, but house prices fall, and that has a negative effect on general feel of the economy.
We have our director telling you not to say that or to say that more, to try and get the price down, because he's trying to buy for the first time.
I'm going to talk down
James.
prices for.
James got your back here.
Yeah.
Got your back there. So having a look now back to Bank of Japan just very quickly, because taking a look at the yen versus the dollar there, we are still seeing that cross hanging around the base of the daily 80
It's taken a bit of a back seat. If you look where the dollar weakness has been pervasive, and almost that's double take, looking and see where cable is or where euro dollar is. Like cable trading 135, euro dollar trading 115. Dollar yen has managed to hold that 140. It's not been quite the same story of relentless dollar weakness the past few weeks that we've seen against the European crosses. So a bit different. I don't know what to read into it necessarily, but it has been a bit calm, and we've not seen the extreme moves that perhaps we were towards start of May, end of April.
Just marking out some, key area of interest there in terms of resistance, but also what is going to be key is that if you see any or hear any policy divergence whatsoever, Bank of Japan likely to continue saying they expect conditions for rate hikes to eventually fall into place. But if they move anywhere away from this into place mood music, then we could see a change to the current trajectory of the this cross. Also, the press conference by Ueda, the governor, usually starts at around 6:30 GMT. So. Yeah. Taking a look at volatility as well, seeing 100 to 200 pip moves. I mean, given all this, having all this in mind, would you suggest maybe using smaller position sizes if anyone's trading this?
On dollar yen, well, I'd say the volume's a bit low on dollar yen at the moment, so maybe that's not the time to use smaller position sizes. It is very much one of those pairs where you want to have stops in there. It's a 24-hour market here. You're not really exposed to quite a gap risk unless you're holding positions over the weekend. But it's either super volatile or it's super boring. It's a binary game in trading dollar yen.
It is a binary game.
There's not much in the middle.
It's only just got exciting. It used to be super boring for quite some time.
Yeah, yes, super boring for long. But that's what made it the trade that everyone enjoyed, because you just ran that carry trade, pulled your dollar interest, and sat back and watched things move slowly in your favour.
Right. On that note, thank you so much.
On the super boring note, it was getting too much, wasn't it?
No. I was going to say.
Hopefully, all sessions opening gives a bit of life to the show.
No. Well, if you'd like to stay with me all sessions, please stay if you'd like. But after last week's slight, I'm not expecting Matt Harper to.
Oh, dear.
Right, stay with me, guys, because we are going to have all sessions right after this. This is the best thing about the IG platform, because you get to take a position before the US market cash open starts. But thank you so much, Matt. Always a pleasure.
Hopefully something more to talk about tomorrow.
Yes, and we will see you then.
tastylive's godfather of options, Tom Sosnoff, is grabbing his passport and taking this show international. He'll be joined by IG's Rich McDonald in London and Milan, along with special guests at each stop for an evening of live trading. It's fun, challenging, and moves as fast as the market. Doors open at 5, with trading starting at 6. Come early and have a pint or glass of vino with the boys. It's totally free, but space is limited. Register at tastylive.com/events. Options just got molto interessante.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do.
This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission-free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hey, welcome back. And we are at all sessions with me any moment now. How many seconds to go, guys? Got about 15 seconds, just getting you across some of the big news ahead of that. And of course, we are keeping a close eye on those hostilities in the Middle East. Here we go. Right. We are off. We're off to the races. Let's have a quick look across all sessions. Let me get my watch list up for you. And we have, there we are. Let's have a look at the winners list as first, because we are seeing a bit of a stabilization across the markets. Terra Wolf, all sessions up 2.7%. Riot Blockchain up 2.5%. We're also seeing the like of Oxy up 1.5% and Tesla up 1.7%. Monkey Man, if you still have a position on Tesla. Some of the minor names as well also looking like they're higher. Can see Alcoa, they're up 1.7%, and Palantir also up 1.5% there. Car stocks, especially in the EV space, Rivian is driving higher, and so is NIO, up 0.2% there. Having a look at the losers list, changing gear now, if I may, and it's still shaking out there. We've got some of the pharmaceuticals in the obesity, diabetes space. Novo Nordisk down about 0.8% there. Also, seeing the SPDR gold shares, all sessions down 0.5%. Beyond Meat still on the slide there, still hurting, down 0.33%. This one is a share price in pain and it has yet to rebound. And we also have eBay, all sessions down 0.5% there. Now, trader friends, this all coming in a time when we are keeping a close eye on hostilities and rising geopolitical tensions in the Middle East. Just checking in on oil quickly for you, because here in Europe we got Shell up 1%, BP up because you know, we saw huge moves lower earlier and also on Friday. So a bit of respite right now, as you heard Matt Arber say just now actually, that a lot of the action seemed to happen in Asia, and we're seeing signs of stabilization, not too much volatility here in Europe. Having a look at oil prices for you, because it's still down 1% there. This is the 5-minute chart for you, and we have seen an easing off since the spike that we saw on Friday. Just zooming in for you there, just so you know where that price action was. Look at that big gap up there, and I've made it so it's easier for you to see. But we are seeing stability now. Lots of people waiting on the US to come up with concrete details of what they might do. At the moment, we haven't seen any action just yet. And we also are waiting to find out what comes out of the G7, if anything, because they are also meeting. Let's have a look at some of the other spaces that are tracking higher. Those of you looking at energy, the energy sector across Europe is tracking higher. The .XEP among the biggest gainers, no thanks to higher oil prices there, but oil is also starting to stabilize. Let's have a look at some travel names, because we did see them sag and on Friday, but they are likely to now bounce back after that reaction. This is the 5-minute chart, but having a look at the daily chart as well there for you. There you see the reaction earlier, but let's have a look at the daily chart. It is now up 0.75% there. Similarly, the EasyJets, Ryanair, I'm expecting to see a similar, actually EasyJet is down still 0.33% there. Away from the numbers, Neil saying at Kate Murphy, I have a target of 79 for Vodafone because it touched the daily support there on Thursday. Let's whack that up for you. Richie Rich, no doubt in bed, looking at his Vodafone shares there. But having a look at Vodafone, this is the daily chart there for you. And we are starting to see it touch that support and, well, actually resistance that was last seen. This is a line of interest here between the 75 and 74 bucks, 74, rather 74, 75 level there, and we are close to a breakout. If it breaks above that in a confident way, then perhaps we could see it make moves towards levels seen mid-May there. Keeping a close eye on that. Thank you so much. Away from the numbers. Also, just want to quickly check on Entain, because Entain is a big mover. The Entain is up more than 8% there after its US sports betting joint venture with MGM Resorts, BetMGM, upped its annual revenue and core earnings forecast. Last but not least, giving you a look at Kering as well, because Kering is moving ever higher. Kering there up 8.5% now, after being up around 7% earlier. And Kering there, this move higher, it has been quite a sorry looking stock, as you can see there from the technical analysis that I've drawn there, but it is now moving this tiny little blip there. If you, I'm going to try and zoom that in for you, and that blip higher is because of a report saying that Luca De Meo will become their new CEO. This is the person that turned around troubled Renault. So stay with us. Let us know what you're trading, because right after this, we are going to have Decoding Crypto, the latest in the series. Hit the like and subscribe button. Those of you that trade the space, let us know what you are trading. After Decoding Crypto, we have Axel to come to give us his trade of the week. Hey trader friends, welcome back. And we are talking crypto today with Ryan Grace, the head of Tasty Crypto, all the way from Chicago. He joins us right now to talk about this on a day when we have this brand new product. I'm sure you've heard all about it already. Ryan, how's it going?
Angeline, I'm doing well. Thank you very much for having me. And it is an exciting day. We've got spot crypto launching in the UK. What else could you hope for?
I know, right? I'm just bunging this on the screen for you, trader friends, so you can have a look here. But there you go. You can find this online, everything you need to know. Prior to this, it was only open to pro traders, but now, you know, anyone can take advantage of this, and you can trade with us on the platform. So this is something that you are already au fait with, Ryan, because you guys have had it over your side for some time. I guess our traders are more used to, you know, spread betting CFDs, and they want a bit of hand holding. So I often get asked, you know, by some that are unfamiliar to this space, you know, what is crypto. Give us the very sort of filtered, easy to understand version of this, because, to someone who is relatively new to this space.
Yeah, absolutely. So to take a step back, crypto really is this catch-all term that's used to describe everything from blockchain technology, distributed ledgers, tokens, cryptocurrencies. So there's a lot that fits into the box. But the way to think about crypto is very simple. Crypto is a technology. And what is this technology? It's internet money. And what do I mean by that? It's a way to transfer value on a network. It's permissionless. I don't need to go and ask the bank, can I do this? I can connect to the internet and I can transfer value across this network via blockchain technology, which is how it works, and cryptocurrency or tokens. That's the value transfer mechanism. So we can get into all of that. But again, it's very easy to think about. It's very simple to think about. It's a technology.
That's right. And I'm just going to whack up the platform just very quickly to show you our offering at the moment. This is amazing because, Ryan, as you know, it's, we've done this at speed and built it out for our clients here who have been asking for this for, a long while. I hold Bitcoin and Ethereum. And what I tend to say to people is it's a bit like an online game token, right?
Yeah, I think so to some extent. There are so many different cryptocurrencies, and in some cases, you have meme coins, which maybe there's a community behind it, but maybe people just think it's fun. It isn't intrinsically worth anything. On the other side, you have Bitcoin, which the analog tends to be digital gold. And it's pretty compelling, I think, there's an argument at least around this, that it certainly is digital gold. And therefore, it has intrinsic value in that, well, you can transfer value, or it is a mechanism for doing so, across the network. So you have a couple different ends of the spectrum. You have a lot of utility that can be gained from some tokens. You have others that arguably maybe don't have that intrinsic value like I mentioned. So you need to understand and learn a little bit about all of the different tokens. But I think the best place to probably start is like you've mentioned. You've got Bitcoin and Ethereum in your portfolio. Bitcoin is the largest token or cryptocurrency by market cap. I believe Ethereum is second or close to it. So I would probably start with the larger market cap tokens, but you really want to learn about all of these because they're very different in the same way that when I go to the stock market, I want to trade shares. Well, they're all different companies.
Yeah, and they all have different functions, different, backgrounds, different ways of understanding that market and asset class. I often get asked, the whole crypto market, is it down to supply? Is that what is, holding the price up? There will only be, for example, 21 million, reportedly 21 million Bitcoins. So it's, designed to be rare. Give us your thoughts on this.
Yeah, absolutely. So if we just stick with Bitcoin, there certainly is the scarcity element to it. And that's probably, where that direct relationship or that analogy between digital gold and gold, or Bitcoin and gold, comes from, why we call it digital gold. There's only going to be 21 million. I believe 19 million or so have already been mined. And it's very likely from the early days that a couple of million Bitcoin are unrecoverable. They've been lost. There is some risk with how you store cryptocurrency. And when you go all the way back to when this came to life, really back in 2009, 2010, you have the Bitcoin pizza story. People didn't know what this was, what it was going to be worth. And so you have people that have crypto on hard drives or Bitcoin on hard drives that have been lost. So all of that said, that is one of the primary reasons that I think people are interested in it. But you have to ask, why is that interesting? Well, that's only really valuable or interesting in a world where you want to invest in hard assets. And the reason why you'd want to invest in hard assets is because you're seeing the debasement of fiat currency, right? We know how indebted the US and many nations just around the world are. We know that we have slowing population growth, in some cases slowing productivity, and we have so much debt against that. that we constantly have to, when you look at the central banks, you look at government spending money, you kind of have to stimulate. And that monetary stimulus is debasement of the currency. And so we've talked about inflation. You know, you look at CPI, you look at consumer inflation, but really it's more about the debasement of your purchasing power. And when you look at something like Bitcoin, it's very compelling because of that. And when you look at what drives this asset on the margin, it tends to be global liquidity, financial conditions. It tends to be central bank balance sheets, right? There's a pretty strong correlation between the expansion or contraction of the Federal Reserve's balance sheet here in the US and the price of Bitcoin. There are also some charts that you can point to if you look at money supply, or global M2, on about a 90-day lagged basis, and everyone can find this on X, we'll share this around, but on a 90-day basis, on a lag, there's almost a 0.95 correlation between the price of Bitcoin and what we see in terms of global M2. So when there's more liquidity in the system, there's more credit in the system, interest rates are zero, and we continuously stimulate this broader global financial system, there's really then a case to be made for hard assets, and Bitcoin, given its scarcity, like gold, is considered a hard asset.
We're also seeing uncertainty drive this, right? Each time we get, markets soar, as you saw in April, and to a certain extent early May as well, and this sort of erosion of trust in fiat currencies, that tends to also support Bitcoin, correct?
Yeah, absolutely. And I think it gets back to the point that we know if there's enough volatility in the system, or if things get bad, the monetary authorities tend to step in. I'll use the Federal Reserve as an example. I'm here in the US, but there is the Powell put. There is the idea in the market that if you have a large enough drawdown, Trump tweets enough, there's enough volatility that's sustained for a period of time, we'll be more aggressive in cutting interest rates, and ultimately we will be back to expanding the balance sheet through open market purchases. And that tends to drive all asset prices higher. That relates to asset price inflation. And when you look at the returns of Bitcoin and how volatile it has been, it's been a pretty good trade. It's been a decent performing asset, one of the best performing assets over the last decade. And until that isn't true, that's something that people believe in the market. It's reflexive in nature, and I think that's one of the things that we do see. Now, it doesn't mean that crypto prices, when you think of them as risk assets, aren't going to be immune to short-term volatility. We've certainly seen that. We go back to some of the tariff announcements here out of the US, had a lot of volatility in April. Bitcoin had a significant drawdown as well, went down to about 75,000.
Yeah.
Has since bounced. But I think those are corrections that in this environment, you look to really take advantage of.
Just whacking out my chart here, Ryan is back up above the 104,000 level, and as you pointed out, it has had extreme, volatility, but it is, at levels, most people would not have imagined even, 10 years ago. It's quite incredible. Lots of people also watching us asking, how does crypto work? I mean, for example, I've got a wallet. How would you explain to someone who doesn't necessarily have a digital wallet?
Yeah, I think the easiest way, without getting into the weeds around the technical complexity, how wallets work, you have a private key, a public key. In some cases, you're in control of that. In other cases, it's held on the exchange. I can dig into all of that, but the way this all works is through a distributed ledger. So when you think about a blockchain network, it's a bunch of computers, a bunch of nodes. So decentralized computer network, it's all running the same code. The easier way to think about that, or like, what does that mean, is really that it's a spreadsheet in the cloud. All of the nodes on the network have the same version updated in real time, and it's cryptographically secured. So there's all the fun crypto details, but they all have the same version of the spreadsheet. And so that in itself is what powers cryptocurrency. Cryptocurrency is then a use case. It's an application of this technology. So you have blockchain technology, you have this network, distributed compute, and then a very compelling use case of the technology tends to be the ability then to transfer value on that network or to move it across the ledger. How do you do that? We do that with a token. do that with a cryptocurrency. So Bitcoin is a cryptocurrency. Bitcoin, and when we talk about it this way, we tend to use a capital B, but Bitcoin with a capital B is the technology. It's the blockchain network. Bitcoin, lowercase b, quite often, is the cryptocurrency or the token. It's the native token to that blockchain network, and it's how that value is actually transferred. Now, we price it in fiat currency, so as humans, it has value to us, but as the computers talk to one another and verify transactions, this is the cryptocurrency. It's what they pay each other in order to validate these transactions with. So I don't know if that's everything you're looking for around how it works, but I think because this is so complicated, sometimes it's easier just to start with kind of high-level concepts. But again, I think about it as a spreadsheet in the cloud, and the cryptocurrency is how you move value around or on that spreadsheet from one column to another.
And you've explained it beautifully because it can get quite complex, right? And so last but not least, before I bought my first, crypto, I was told one thing you have to know, Angela, one thing, the key takeaway is no key, no coin. There are many keys, many wallets that you mentioned earlier out there. Which ones do you like? Which ones do you use? Just give us a quick summary.
Yeah, absolutely. So the term no key, no coin, or not your keys, not your coins, relates to the fact that if you have the seed phrase, if you have the private key to a cryptocurrency wallet, because this is a distributed database on the internet, if you have that key, then you are technically in control of that asset. Anything that's held at that wallet address, you can move it, you can transfer it, you can sign transactions, you can do things with it. Why this matters is because if you go back in the history of Bitcoin, you've had exchanges that have been hacked. Most recently, you had the largest exchange in the world a couple of years ago in 2022. Well, we found out it was a fraud, or they were doing, I should say, fraudulent things with the crypto. Anyone that holds their crypto on an exchange, and it's not right or wrong, it's just the objective truth here, but that exchange does have the ability to take control of that crypto. And so in the case of FTX, they were using the customer's assets. When you hold your crypto on an exchange, like a Coinbase, for example, or a Binance, you're not technically the owner of the crypto, but that's also true about your money in the bank. It's just that we trust in these institutions versus this relatively new technology, or we trust in them more so. So when you hold your key via a self-custody wallet application, and my favorite happens to be Tasty Crypto, but there's many others that are out there. When you hold your key, you are the only one that's in control of that crypto. And you can think about it like this. If we go back to the example of a bank, you have your money in the bank is going to lend that out. We have a fractional reserve system. You're not technically in control of your money. There is a chance there's a bank run. There is a chance that when you go to the bank,
there was one here in the UK not too long ago.
Yes.
Yeah, that's right. So it's all about confidence.
We do trust.
Yes.
We do trust that the Bank of England will make everyone whole, or the Federal Reserve will make everyone whole. We have historical precedent of that to an extent. In crypto, well, there really is no other counterparty. So you're either in control or you're not. But when you think about the self-custody wallet, again, that would be similar, in my opinion, to, it's not right or wrong. You have some money in the bank. You have some money in a safe at your home where you are the only one that has the combination to that safe. That's the self-custody or non-custodial wallet. The custodial or custody side of it is where it's held with the exchange. So that's there's some nuance here, but those are the differences in terms of how you store your crypto.
Thank you very much. We are very, very lucky to have you with us and explaining that so gracefully. Ryan Grace, head of Tasty Crypto. For more on this, do hit the subscribe and like button. Of course, crypto is a risky product, so do make sure you're guardrails are in place, and to make sure that you know what you're doing. You have your keys in place as well. But do hit the like and subscribe button if you want to see more in the series with myself and Ryan.
Watch Trade Live with IG weekdays from 7:30 a.m. on our brand new YouTube channel at Trade Live with IG.
As well as the live show on our new YouTube, you will find our full beginner's course to trading options, daily YouTube shorts of all the action that happens after the show is finished, and Trade of the Week and Psychology of Markets.
And don't forget to hit those like and subscribe buttons for more exclusive trading content.
Do you like the sound of tax-free trading? Well, that's exactly what spread betting enables you to do. This tax-free way of trading lets you speculate on the price of over 17,000 financial instruments, like shares, indices, forex, and commodities, without actually owning them. With spread betting, you can benefit from both rising and falling prices, letting you find the perfect opportunity. So if you think the market's going up, you buy. If you think it's going down, then you can sell short. Not only is spread betting exempt from capital gains tax, but it's also commission free. All you pay is the spread. With us, you're not alone. You're part of a wide community of traders that you can learn from. We've got the experts, the tools, and extensive educational resources to help you on your journey. If you're not quite ready to trade with real money, you can always give it a go on a demo account. Open an account today, join the conversation, and be inspired to make moves.
Hello and welcome to Trade of the Week on Monday, the 16th of June 2025. What I would like to do today might be quite counterintuitive, but I would like to go long the DAX index, the German DAX stock index. And if you look at the chart, you may be wondering why. Well, you can see here that we've sold off before the Israel-Iran crisis actually kicked off. And on Friday, we basically retested our previous low here going back to the 23rd of May. And as you know, this is my line in the sand for a lot of the medium-term uptrends, whether you're talking about US markets, European markets, or Asian markets. It's the 23rd of May low. And here what we're seeing is basically a break of this steep downtrend line. But more importantly, just ignore this one here. That's the Sunday session on the daily financial bet. So we ignore that because it's not when the market really traded. But intraday, to just buy it here because we're forming something, we don't know what it is yet, is actually quite risky. But if you go onto the 60-minute chart, the 1 hour chart, you can see that we've literally just managed at the open here to break above these previous highs and seem to be holding there. So we're breaking above previous resistance, and that to me may indicate that we formed a double bottom here. So wave down, test here, down again, test here, and we're now above it. So for that reason, even though the conflict is still ongoing, technically speaking, we may want to go short here. It's a risky trade, and I don't think we're going to retest the all-time highs anytime soon, but we may well head back up again towards the 30-period simple moving average here around 23,900 or the 24,000 area before we perhaps come off again. So from that point of view, it still makes sense from a risk-reward point of view to actually go along around current levels. Now, you may put your stop below Friday's low here, but since the low on the 23rd of May is just marginally below that low, I would place it there. So before we summarize this trade, I'd like to also talk about the trade from last week, and that was to go long Brent crude oil. You can see it here, and basically we went long here on the break of that resistance area, and we now got out of that trade. If you haven't gotten out of that one, you can get out now if you want, but that was a nice setup which made us about 7 or 8%, I believe. So that one worked out quite well. And on the 19th of May, here on the break of that downtrend line, we went long cable, the British pound against the US dollar. That one's still ongoing. If you wanted to, you can move your take profit order up to the low seen on the 10th of June, or if you want a tighter one, to Friday's low, but that one is still ongoing. So coming back to today's trade of the week, what I would like to do is go long the DAX index, the German stock index, with a stop loss below the 23rd of May low, which was on the daily financial bet at 23,267, and an upside target between 23,900 or 24,000 or so. Hello and welcome back to Technically Speaking, where I'll be covering whatever you want me to look at from a technical perspective. And as you just saw on Trade of the Week, it's a trade which is quite risky because of the heightened tensions in the Middle East, and we don't know what's going to happen next. But the fact that indices held up quite strongly overnight so far, above the low seen on Friday, and that low actually was made above the 23rd of May low, as you know, my line in the sand, leads me to believe that at least short term we seem to be in a bottoming formation and maybe heading higher, simply because we broke through this downtrend line and the on the hourly chart, the previous resistance just now, as I showed you. Yes, we'll have to see whether that one plays out or not. And that's why it's really important to only risk 2% of your trading capital. Because if you remember a trade of the week, for example, a few weeks ago, I went long New York sugar. And that one, even though it was similar to the DAX one, we were very close to major support, etc., got stopped out. And basically, if you look at it here, we had our stop loss below the low from January. And we basically got stopped out on this day here on the 5th of June. And then some people kept it here for the next trade of the week. And yes, it did come back to just below our entry level, but then it just followed the trend again. So basically what I'm saying here is quite often it's the least painful trade to take the first loss. So you have a stop loss for a reason. Don't move it away. Don't try to hopefully get back into position. And definitely don't double up on your losing position to make your losses back. That's the worst thing you can do, because I think sort of 8 times out of 10, what happens is this sort of thing where basically you have perhaps the small retracement taking you closer to your entry level, but then the trend just continues. And there's a reason why the trend is in place, and that reason is more likely to continue than not, which is why the first loss is always the most, the least painful, the least expensive quite often to take. So just as an aside with regards to trading and how you invest and what you need to watch out for. Now, I've been asked to look at the VIX today, the volatility index. You can see here the VIX basically spiked higher as we expected to, and did so on Thursday when Israel started to attack Iran with its missiles. But surprising to very many, we saw a very small move up and we went straight back down again. And we haven't seen what we saw basically in April when Donald Trump came up with his tariffs, this huge spike higher. So the market is either very complacent, as it's still very bullish, and perhaps focuses more on this week's interest rate decisions. But then again, I'd be surprised by that, because yes, we've got the Bank of Japan, yes, we've got the the Bank of England, I believe, and the Fed. And basically, we don't expect any rate cuts, especially now that the oil price has risen to around the above the $70 per barrel mark, and therefore that could have inflationary pressures ramping up, with regards to also the US tariffs now perhaps in the future having an impact on inflation, which we haven't really seen so far. And both of that will probably be watched very closely by the central banks, not just in the US, but also elsewhere. And therefore, I'd be very surprised if we see any rate cuts this week. So I don't think the market's focusing on that. And perhaps what it is thinking is that actually Israel is doing relatively well with regards to its aims of trying to take out a lot of military sites in Iran. And therefore, because things are, in inverted commas, going well, at least for the Israelis, or seem to be, the market doesn't seem to think there will be an escalation, but obviously that can very quickly change. Iran, if it were to close the Strait of Hormuz, you have 20% of the global oil transportation that goes through there. If that would be closed off, then that would have a very negative impact, obviously, on world supply, and the oil price could rise much further. That in turn could lead to inflation again. So yes, that is a scenario. At the moment, it seems to be discounted by a lot of people, which is why the oil price hasn't really moved very much over the last few days, even though more and more missiles are being sent back and forth between Iran and Israel. Basically, because a lot of analysts seem to think, well, yes, but Iran would be shooting itself in the foot if it were to close the Strait of Hormuz, because it also exports a lot of oil through there. So that is possible. But then again, if you look at history, if you look at the Iran-Iraq war, the Iranians were able to wage that war for a very, very long time, many, many years. So that one is not priced in at the moment, that we see a Strait of the Hormuz being closed. And basically, that's the only market really, oil and perhaps natural gas to some degree, where we've seen this conflict play out so far. So it doesn't seem to be a dollar play so far. It doesn't seem to be an equities play that much. I mean, Friday's sell-off, yes, there was a sell-off, but it was around 1.5% if you look at other markets. So that is why the VIX hasn't risen so strongly. And as you can see here, we're just tailing off. Having said all that, if you want to trade the VIX, probably a way to do that, if you expect something to happen, which suddenly leads to an increase in volatility, is to have an automatic entry level here, limit order, take you into a trade, or a stop entry order here above the high seen on Thursday of last week. Because if that were to be taken out, we're taking out also the March high, the 23rd of May high, sorry. That's the high, that I mentioned before as a low for all the equity markets, like the Nasdaq. We'll look at it in a minute. If we go above these two, then we may have an acceleration to the upside like we saw before. But until that happens, to be quite honest with you, if you look at just the chart, we're just trading at the upper boundary of the sideways trading range we've been in since the middle of May. So just be very careful with that. Talking about the Nasdaq, you can see here, quite surprising, really. So we fell through this uptrend line. You've been noticing in my commentary over the last couple of weeks, I've been saying that we've got a negative divergence here as the relative strength index made lower highs here, whilst the index was making higher highs. And that in turn created this wedge formation. And I was expecting some sort of consolidation to happen. And this may have already been it, or it might just be the beginning of it. But to me, the market still looks quite frothy up here. But you can see here, right now, the market ignores me, because the Nasdaq 100 overnight so far, at least, is heading back up again. Again, ignore Sunday's trading session here. But again, technically speaking, where's the last reaction low? Where's Friday's low? And that low on the Nasdaq was made at 21,456. As long as we stay above there, the trend's still your friend. We're still in an upward trending phase here with higher highs and higher lows. So that is basically what the charts are telling us at the moment. I've also been asked to look at Big Yellow. That's interesting because we don't usually look at that. And let's have a look at Big Yellow Group and see what we can see here, technically speaking. Now, as I always say, I'm not giving any advice. I'm literally just looking at this chart afresh. I have no idea what it has been doing, what it is doing. So I'm just sort of glancing at it very short term, and obviously I can't do a proper analysis here. But what I do see in the very short term is that we seem to be trading sideways. We've got resistance here. We've got that support line here right now, which we're testing earlier this morning. But let's look at the longer term chart if we don't know what we're doing. In the short term, you can see here we had a sideways trend. This is the monthly chart. We've come off our highs seen back in December 2021. We made a low, a multi-year low back in April. Since then, we've had a nice bullish candle, and then we're just basically running out of steam at this previous resistance, which is the low of February of 2024. On the weekly chart, what we can see again is probably a thrust to the upside, a move down, and normally or usually what we expect is another thrust to the upside. But for that to take place, we need to rise above last week's high at 1,022 on the daily financial bed. So if we go into the daily chart, what we need to see is this continuation of higher lows and higher highs, and for that to take us above last week's high here. And if that were to happen above the June 12th high, we would most likely also break through this resistance line. And then the next test would be the high going back to May of this year. And if that can be broken through, then the way would be open for us to head higher, probably towards these lows going back to June of last year, because previous lows which were support because of inverse polarity now create a resistance area. So that would be my upside target if and only if we were to rise above the May high. Now, if you're short, you could argue, well, that resistance here in the past has held. We remain medium term still bearish because we went down, then we had a sideways trend. So if you're short, your stop is probably above the 6 May high, and your downside target, the first one, would be the 23rd of May low. And if we were to fall through there, then it's quite likely that we could actually slide further towards the 7th of March low, so 893 or so. So that is a distinct possibility. Now, I've been asked here another question. Instead of a flat 2% risk per trade, what about varying the amount up and down according to conviction? Well, you can do that. But, and I do that not according to conviction, but I'm doing it according to my equity curve. And I might be giving some secrets away here, but at the moment, my equity curve has a slight dip. I'm in a drawdown at the moment. So what I've done with my personal trading, I've reduced my size from 3% to, at the moment, 2%. And if I continue in this drawdown, I'll probably reduce it to 1.5% or even 1%. So I'm reducing the amount I'm risking with regards to my equity curve. And yes, it will take me longer to get out of my drawdown again because I'm trading smaller size, but I will also reduce the risk of my drawdown getting bigger and bigger and bigger, because basically what I have is weekly maximum drawdown limits, which then trigger a decline in my trading size. And then I also have monthlies, obviously, and quarterlies and so forth. And one of those got hit last week. So basically, I'm now trading smaller size. And you can do that. So yes, you can vary the percentage, but I personally wouldn't go above 3%. And even 3% is pushing it. Now, with regards to conviction, conviction is relative. I mean, you might think you're right. Fine. But can you actually prove it to yourself? Can you test your systems? Do you have a proven backtesting strategy which says to you, yes, in 70% of the cases you're right, or in 80% of the cases, and your setup looks like this now, in which case, yes, you could increase your trading size. But if it's just your feeling or what you think anecdotally is happening most of the time, you might be biased without realizing it towards only seeing the right outcome for you. And therefore, you might actually be trading something that you think you're right, but where you're not. And I've did a very interesting experiment many years back with my trading coach, and basically we looked at the trades where I had the highest conviction, so I rate myself between 1 and 10, and looked at those trades, and then the ones where I had the lowest conviction, where I was the most scared, basically. And it was really eye-opening, and I didn't think that would be the case, that the ones that scored a 3 or a 4, well, I was really quite worried that the trade wasn't going to work out. Well, those were the most profitable ones I did. And the ones where I had an 8 or a 9, where everything aligned technically, fundamentally, etc., quite often weren't the ones which worked out the way I thought they were going to do that. Perhaps that is because we're all human beings and we think we see something special, but actually what we're seeing is what everybody else is seeing. So just bear that in mind. But yes, you can look at Kelly criteria. A lot of traders do that. That is definitely a right approach, in my opinion, to manage your risk. But because of Trade of the Week also catering to sort of beginning traders, we just keep it for simplicity's sake to 2% plus the spread in and out. So that's the reason why we use 2%. But you're completely right. You can use the Kelly criteria and vary the risk that you're trading, also with regards to the equity curve or your conviction. Now let's look at Vodafone. Another question I've got here. And keep your questions coming in, because we can always have interesting discussions about the markets or about individual stocks whilst looking at the charts. And what we can see here with Vodafone, which is interesting. By the way, if you are interested, I wrote an article on Vodafone 3 post-merger last week. So have a look at that. You can find it on the IG website or on any search engine by just putting my name in and put in Vodafone 3. You'll see what my analysis is with regards to technical and also fundamental analysis with regards to that share price. And what you can see here is basically we're now bouncing off support. That support was the 5th of June low. We nearly retested it on Thursday. And despite the equity markets going down in Germany, in the UK and so forth on Friday, here we had upside taking us higher. So what can we actually see on this chart? Well, we are in the process of breaking through this resistance line. It's just a tentative trend line because we've got 2 touching points, not 3. But overall, from the April low, what we're seeing is a series of higher highs and higher lows, which is the definition of an uptrend. And we are likely to head towards the high seen in March. And if we can break through that high around 76 cents or so here, then I wouldn't be surprised if we were to take out the previous high and head higher still. If you are a short-term trader, your stop loss is probably the low from the 5th of June if you're long. If you're short, the stop loss is probably your high here on the 23rd of May, or if you need a tighter one, the 18th of March high. And if you look at the weekly chart, you can see here that we're trying to break through this key resistance area up here, going back to the highs seen in May of last year. And if we were to manage to rise above the September of 2024 high here at 79.32 on the daily financial bed, then we could be forming a very major saucer bottom here, and longer term could be heading back up again towards the 100 area, even higher. But all of that is speculation at the moment. At the moment, what we're seeing is upside momentum, yes. Is it more likely to continue or not? If we close today above this resistance line, probably. And if you go long, your stop is probably down here on the 5th of June low. So now I've got another question. You've got a trend line here since the April low. That is correct. I've got the same support line. Now, I've got this uptrend line here on Vodafone because basically, if I had drawn it through here, this data would have gone through it. So you need to make it less flat and make sure no data is going through it. But because this touching point was very close to the trend line, this to me is a valid trend line, whereas this one here has had just 2 touching points. That's probably just a resistance line. Okay, another one. Greatland Gold, let's have a look at that. We've looked at this one before, I believe. And let's have a look at this chart here and see what it does. And it keeps on rising, which is not surprising. And here what we had is a lovely ABC Elliott wave correction. That was our entry signal here. That's your stop loss. These are the strategies I go through, for premium clients when you come to the head office. Like tomorrow, we've got clients coming in and we do a whole day session on macroeconomics, on fundamentals, on technical analysis, on trading, on strategies. And that's one of the strategies I talk about. And you can see here basically that we had a lovely entry point, tight stop, and since then we've moved higher. But even if you caught it later, for example, on the rise above this relative high here, yes, the trend's your friend, clearly pointing higher. And if you look at the monthly chart, we are now also trading back above the March 2022 high. We've had 6 months of consecutive gains. This chart looks bullish to me and is likely to head to the next upside target, which is the October 2021 high at 2280 on the daily financial bed. So that would be my next upside target. So yes, looking very healthy indeed if you're long. Where's your stop loss? Probably for me, the last reaction low. If you can, long term, it would be below the 15th of May low down here at around 1150. But ideally, probably you want a tighter one below the 2nd of June low here at 1360. But yes, the trend is your friend, looking very good here. Now I've got another request here. I've got Apple, and let's have a look. at the Apple share price. Apple hasn't been doing that well over the last few weeks. As you can see here, we are trading sideways. Now, what that means is that the thrust up from the April lows hasn't led to anything, because we failed at that previous resistance, the previous lows from mid-March. You can see that here. And to me, we are just trading in a sideways trading range. Where's immediate support? Well, probably the lows of the 7th of May and then this 23rd of May low, which I keep mentioning. That's around 19,318 on the daily financial bet here. And the upside is here on the 1st of May high at 21,451 on the daily financial bet. So basically, we're just trading between these two. And we are today mimicking what's happening in the underlying indices because those are slightly rising as well. So the Apple share price is rising as well. But basically, if we were to fall through these lows here in the next few days, then my next downside target would be 1st of April low. A fall through there would probably continue this downtrend that we've seen basically since December of last year. So for me, that would be bearish. The odds are that we see further sideways trading or even a bearish continuation. I think that is greater than if we were to see a reversal to the upside. Now, if you're long the Apple share price, you have some resistance here. I can draw it onto the chart as a line. And you can see here that we are, can you see that was a previous resistance line? We tested it here perfectly on the 29th of May. Had I drawn this in, you would have had all this data going through it here. So I need to move it up to the highest point. So that's where my trend line is. Now, trend lines, you need to be careful because basically, well, actually that one's incorrect because I didn't connect this point here. Sorry. So let's just do this one again. So you take the highest point on your chart that you can draw it from, and then you make sure no data goes through, no candles or bar charts go through that high. Now, obviously, you could say, well, that's my highest point. Yes, you could draw a trend line there, and that is correct, but you'll see that's a far too flat trend line, which is so far away from the current price action that it's not really of interest to us, this one here. So that one you could leave on your chart for later on, maybe it'll act as resistance in the future. But going back to this one, quite often people say, oh yeah, I've broken through the trend line on a daily close. That in itself doesn't mean much. At least to me, basically what I want to see is a close above that downtrend line and a rise above the last relative high. And if you've got a relative high, as we know, a relative high is simply a high which is higher than the one to its left and to its right on these daily candles. But if that's very close to the next higher one, as the case is the case here, then for me it's the 4th of June high, which we need to take out. At least for us to break through this resistance line and to then head higher towards the upper boundary of the sideways trading range. But this small high here, as you see, the market just moved sideways. It's less important technically than this one where we had a sharp up move and then the sharp down move and this bearish engulfing pattern. So ideally, what you want to see for the bulls is a breakthrough this downtrend line and a rise above this 29th of May high. Then you could see perhaps further upside. So this is how I would analyze the chart with regards to that. Now, the question is here, it appears to be heading lower, but when will it stop? I have no idea. No one does. All you can do is, if you're long, is place your stop losses somewhere. If you're comfortable, if you want to give yourself a little bit more leeway, probably place it below the 21st of April low. Again, I'm not giving you any advice. But if you want a tighter stop, then you've got these lows here going back to the 23rd of May. But yes, the trend right now is your friend, and they're still pointing lower for Apple. Now, somebody else asked me about gold, and you can see here that the gold price is interesting as it's coming off now yesterday's high, yesterday on the daily financial bet. Here we had a Sunday trading session and Friday's high. And interestingly enough, as you can see here, we are now trading back below the 6th of May high. So it is possible that short term, the gold price may come down. But where's our support? Well, we've got the support going back to the 5th of June high, and then these highs here at the beginning of June. So this 3,390 to 3,400 area may act already as good support, and perhaps we could then continue to the upside. The medium-term trend, and as you can see here, what we saw is a breakthrough, again, this ABC edit wave pattern I mentioned before. long here, stop loss there, went up, tested the resistance line, failed, broke through it, closed above it. That was positive. Quite often what happens, you then get a retest of the trend line, the broken down trend line, which now because of inverse polarity acts as support, held here for 3 days, and then we went up. So this is the last important low here, the low from the 9th of June at 3,294. If we fall through here, then this whole upside momentum may be put to question, and we may then trade, in a bigger sideways trading range between 3,500 and 3,169 or so, if that were to happen, if we're to take out that low. But that stop is a long way away, so you need to decide whether we are already seeing a topping formation now or not in the short term. Now, I've also been asked to ask about oil. Well, as we know, oil, we went long trade of the week last week on Brent crude oil. Let me have a look at Brent. So again, why did we go long? Well, basically, we had a break above previous resistance. That was the last reaction high. That was an important high. We managed to breakthrough on Monday, didn't do so on the previous Friday. That's why I wanted to go long, and then stalled a bit, and then obviously the Israel-Iran conflict happened, and we went straight to our target. What was our target? It was these, just around these highs here, and those got hit. Again, what we're seeing here is we're coming off short term. Now, this might be a fourth breakout to the upside here above this high here, and we may now come down again. So if you look at the intraday charts, for example, the hourly chart, what we saw is a retest of the high here, and then we're coming off again. But that high was made on the daily financial bet on Sunday. This is not official trading. So I would just ignore that and work off this one. So if we worked off this high, we had to move down, move back up again, down, and then basically we're trading around here again. So we're just consolidating below this previous high. So as long as we don't take out the intraday low from Friday at 8 o'clock in the morning, UK time, which was at 7164 or 7,164 on the daily financial bet, we are still, technically speaking, in an uptrend. So that for me would be my stop loss if I were long from a medium-term perspective. Yes, I mean, if we do come off, I haven't got here a 200-day simple moving average on there, but that could also act as support, and then we've got some further support down here, but that's a long way away. Let's just look at WTI and basically look at what I wrote this morning. Just again, have a look at the website, on the IG website and on the platform, and you can see what I wrote this morning with regards to crude oil, where the targets were with support is, and we're currently testing that support area. Can you see here, that goes back to February of this year, early February, and that's down to around 70, 50 and these previous highs. So this confluence of support and resistance, so previous lows and previous highs, should act as a support area in the short term. But if we were to fall through Friday's low, which was made at 69.71, then we may actually have a short-term top in place, and we may just drift lower slightly. But I do think that we will see heightened oil price for quite a while because the tensions are ongoing and the missiles keep on flying. And unless we see that stopping, I believe that the supply, the possible or the potential supply disruption will keep the oil price elevated. Thank you very much for watching Technically Speaking. Hope to speak to you again next week. Thanks, goodbye.
Well, inflation seems to be coming in a little bit better than markets expected. That's certainly starting to revive a little bit of hope for Fed action. See how the markets managed with that information today. It was a bit of an adjustment. And what comes next as we ask consumers whether this is actually encouraging for them, what that means for the economy, and of course, for markets to follow. This is Macro Money. I'm Milius Spivak, head of global macro here at Tasty Live. And the first thing that we are going to do here is take a look at the data as it presented itself today, and then consider how it impacted markets, what they now think, and what this means going forward. So let's first take a glance at the performance dynamics here, because it is important to break down what markets actually did. And we can see here a little bit of an improvement, not exactly anything to write home about, but a slight uptick in equities land after a little bit of a downdraft yesterday. But the reaction really elsewhere. We can basically check crude oil off the list. It's attempting to digest. There's a fractional gain here, but that's after all kinds of gapping. And on net, actually, crude oil prices are a little bit lower intraday compared with where they opened, and all of this is after a jump of in excess of 5% yesterday around the pullback of non-essential personnel from U.S. embassies in the Middle East, notably in Iraq, and that seemingly suggested that maybe there's some sort of a geopolitical clash that's coming. We didn't see that move extend today, but because there was an upside gap at the futures open overnight, we do have this modest gain. Bitcoin off on its own today, not really falling in with macro narratives, and seeing its losses late in the day, close to 5 hours after all the data came out. So seemingly doing its own thing. The biggest sort of macro narrative that captures markets today is most readily on display in yields, in bonds, in gold, and in the dollar. We see yields here take a significant leg lower, bonds meaningfully higher across the curve, and the deeper you get out into duration, the higher they go. The 10-year rate down 1.2%, the 2-year down almost a full percentage point. Taking a look at where we are on the 30-year gets you even more dramatic results. The 30-year bond today up 0.9% as compared to just 1/3% for the 10-year, and basically a flat result, less than 0.1% rise for the 2-year. If we look at what the 30-year yield did, just in the context of what's going on here, it's down 1.4%. So clearly, bonds higher, yields lower, kind of a day. We can see gold post an impressive surge, up 1.8%. That takes gold to intraday, at least, the highest level since essentially a week ago, but brings it back to those swing highs, which at the time were the highest since late May. So back to monthly highs set, or 1 month highs, as it were, set last week. I suppose monthly highs for that matter as well. And the US dollar broadly lower against its major counterparts, down 0.83% against the euro and 0.64% against the yen. That generally echoes what's going on across the dollar universe. The overall dollar index that takes the value of the greenback against its major counterparts overwhelmingly down, and that's close to 0.6%. So we have a clear kind of story of lower yields, lower dollar, higher gold here. And that, of course, paints a picture of more easy monetary policy as a suspicion for the catalyst. And indeed, there are reasons to consider that as precisely what has occurred. Here's the data driver when all of this starts to take shape, and sort of what equities did is a bit interesting because this is, of course, where they find their gains, having been soggy overnight, and then they kind of run out of steam into the end of the session, in particular in the NASDAQ, which is an interesting caveat to this story. But there is the data right here, and this is the producer price index. And we'll take a moment here to dig into this because it is actually very important to the overall narrative. So we saw in April this shock decline in the producer price index. And this, of course, was comparable really only to what we saw right around the onset of COVID. And what this spoke to was the idea that there was inflation that came vis-a-vis the tariffs, but then that inflation didn't really show up in consumer prices because, as we've looked at before, this is April's data, and here was that decline. It was mainly driven by this decline in what's called services PPI, and that's really measuring the margins that wholesalers and retailers are looking at. And we saw those margins significantly decline even as the change in input inflation for core goods rose to the highest in at least 2 years or so. And that's if you include this errant spike, this 1 month, this 1 month jump. And if you don't, and you sort of look at this as an anomaly and look at this back over here, this was the biggest jump since the inflationary swell in the wake of COVID. So this was indicative of businesses eating a rise in input costs without passing it on to consumers, essentially taking the hit in margins, lowering their margins by 1.6%, as a matter of fact, which was a significant amount for just a single month, and in a sense insulating consumers from the cost hit from tariffs. Now, what we see in this data is that they've started to rebuild those margins back. So not only do we get a month-on-month rise in PPI after this sell-off, we can see that though you have that, the overall core wholesale inflation rate actually declined to 3%, and that was the lowest since August of last year. So you get wholesale inflation coming down. Meanwhile, we can see those trade services margins get rebuilt, both for finished goods, is what you can see here, a significant rise in margins across the various categories of trade services, with the biggest increases clearly seen here in machinery, equipment, and parts. But the upshot here is zero. All these numbers are above zero. That is to say, those margins are getting rebuilt. We likewise see in intermediate services, here was this dramatic decline in margins. Of course, now we've seen those jump back. And again, this was the steepest since some years ago, but clearly we've rebuilt. And that we still have core inflation going this way at the wholesale level, even as margins rebuild, that was encouraging if you were concerned that there was a consumer price index mirage here, telling you that you don't have tariff-driven goods inflation to spook consumers and hurt the economy. But that only looks that way because, at least in April, those consumers were shielded from those price rises. They stopped at the wholesale level and didn't make it all the way to consumers. Now, yesterday, of course, we saw consumer price index data that came in a little bit softer than expected, but generally in line with recent dynamics, this kind of encouragingly normal set of numbers, where the core stayed at 2.8%, the headline increased less than expected from 2.3 to 2.4, whereas a rise to 2.5 was expected. But most importantly, goods inflation, excluding food and energy, this bit where you might have been worried that there's going to be a tariff pass through of costs, that didn't happen again. But markets didn't really run on this because they seemingly looked at it and said, right, let's look at the PPI before we make up our mind here, because if this is anything like April, it might be a mirage again. Well, apparently not. Because as we look at this this set of PPI numbers, it is lower, and it is lower despite the fact that the pass-through has seemingly resumed and margins are being rebuilt. In other words, we have a genuine sense that maybe inflation isn't as hot as people feared, at least for now. Moreover, we also have jobless claims surging, pointing to a weakening labor market. The 4-week average for initial jobless claims up here to some of the highest levels we've seen in quite some time. We can see the reference point here is 2023. So we're talking about nearly a 2-year high on the 4-month average for initial jobless claims. So we have cooler inflation and a labor market that seems to be continuing to weaken. See jobless claims here, again, the 4-week average building into a steep advance really since the beginning of the year. And now overcoming anything we saw last year and going back to this scare here. So all of this, not surprisingly, giving you the sense that the Fed may have room to cut rates more vigorously than was feared, at least at the start of the week. We can see here we've almost fully realigned with the baseline expectations from the Federal Reserve. It said in December and then reiterated in March that it is looking to see 100 basis points in rate cuts over the next year and through the end of next year. So that's 100 basis points in 2025 and 2026 taken together with 50 basis points apiece. We can see here we've realigned within a hair of that here. The total tally now baked into Fed funds futures, 97 basis points. Next year is fully aligned with the Fed at 50 basis points. This year almost there at 47 basis points. And perhaps most importantly, we can see that this cumulative line was meaningfully less dovish earlier in the week. It has now moved back. So we've on net moved by almost 10 basis points in a more dovish direction since the start of the week, and the mix here has reshuffled. So while, for example, as yesterday, we were looking at a similar tally, 97 basis points on net, it was 44 basis points for this year, 54 for next. So there was a bias here, and at the start of the week, it was even more dramatic, 40 basis points this year, 50 basis points next year, for a total tally of only 90, suggesting that there is less scope for rate cuts and that this year would see meaningfully less, while next year would see comparatively more, because the Fed is biased to waiting later and doing more next year versus being more cautious this year. You can see that has somewhat unclenched here. And so, not surprisingly, against that backdrop, we had this response from markets: lower yields, higher gold, weaker dollar. Now we turn to the last bit of U.S. economic data for the week, the University of Michigan Consumer Confidence Survey. And this is perhaps the most potent leading indicator for what is actually the most important contributor to economic growth, household consumption. And what we are looking for here is a slight improvement. We hit this near 3-year low in March as inflation expectations surged. We anchored a little bit in April, where the expectations index, you can see, nudged up a little bit even as the current conditions index continued to deteriorate. And this seems to largely reflect the pause in the White House's reciprocal tariffs above 10% at the start of the month. So we had that big shock with Liberation Day and the foam board with all kinds of large tariff rates across many countries, and not surprisingly, the markets freaked out. We then had, marking the bottom for stocks in April, the announcement that those rates would be put on a 90-day hiatus. And then a little bit later, so initially China was excluded. Then we had some conversation making by officials in Geneva and reiterated by another meeting in London just this week, after there was a little bit of a tussle back and forth, sort of putting the Geneva deal in question. Well, it seems like we've walked away from that. And so we have a situation in April where there's slight anchoring in the expectations component of consumer confidence around the idea that we have this 90-day hiatus, and maybe we don't have to quite go as far as the foam board told us. So what we look at now then is a little bit of an improvement in consumer confidence. And of course, this is very much a critical input, because as we saw in the first quarter GDP numbers, the mess around front running of tariffs creates all kind of fuzz in the GDP data. We saw this dramatic jump in imports, a huge burst of inventory building that ends up in the investment component. And what that gives us is a narrowly negative GDP number, because this enormous import jump around front running of the tariffs skews the data. And everybody, of course, looked and said, well, that's not a real negative number on GDP. It's just the front running of the tariffs. That's going to run its course eventually. And arguably now, as we head into the end of the second quarter, that has already run out of steam. In fact, looking at data out of China, as we did yesterday, we saw that on display. But the real takeaway here wasn't really the front running of the tariffs. Because if we look at the components of GDP, we can see the external sector is an afterthought when we compare it with what is the main driver, the real driver of U.S. economic growth, which is, of course, household consumption, domestic consumption. And that's 68.5% of GDP. Whereas if we net out exports and imports, which is what we do when we do the GDP calculus, exports add to GDP, imports subtract from GDP in the math. And so what you do is you take net of the two, and we can see here exports are over here, imports are over here. Imports are slightly in excess of exports here, so we have this net deficit. And what we find is that this on net is less than 4.5%, 5% of the overall GDP pie. So you would need these dramatic swings to really see this make a meaningful impact. But consumption, the most significant part of the story, that's at the weakest in almost 2 years. Going back to a reference point in the second quarter of 2023. Moreover, just today, we got a release from the Fed that's tracking the financial accounts for the United States, and that showed that household net worth fell nearly 1% year on year in the first quarter. And that's the first decline since we had one in the third quarter of 2023, and the largest since the third quarter of 2022. So the consumers clearly retrenched here in the first quarter and decided not to come out and spend. And this is why this consumer confidence reading is so important. If we continue to see relatively weak consumer confidence, well, that might boost the case for the Fed to move sooner, as the CPI and PPI numbers might suggest. If, on the other hand, consumer confidence goes higher, then maybe that case is diminished. The worst possible thing here, of course, is if we continue to see very elevated one-year inflation expectations from consumers, because that would, of course, get the Fed thinking twice about rate cuts, because it doesn't want to let those inflation expectations run and get unanchored here, because that would show up in overall inflation data rather quickly and hurt growth. So how these numbers are going to shape expectations for what the Fed does next ought to be very interesting. If inflation expectations come in a bit and consumer confidence stays relatively tame, in particular around things like this surge in jobless claims pointing to a weakening labor market, well, then you might get a replay of what we saw today. That is, more Fed rate cuts being baked in. But the question then is, can equities make hay of it? They were the most soggy of the responding asset classes here, perhaps because the case for Fed rate cuts is also the case for a weakening economy. That's not the best news for cyclical assets that look to U.S. economic strength to fuel earnings growth. And that is macro money for today. As ever, we are here Monday through Thursday, right after overtime, a show I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may go therefrom. I'm back with Chris on Fridays for Futures Power Hour, as well as Mondays. On with Victor Jones for the Price of Truth on Tuesdays. Back with Victor and Tom for First Call on Sundays. Writing for the News and Insights portion of tastylive.com. And commenting at Ilya Spivak on the platform formerly known as Twitter and on Blue Sky. If you're watching on YouTube, like and subscribe. Thanks very much for watching. Macro Money is back next week. Happy trading.
What is going on, everybody, and welcome back to Risk and Reward with Gus and E. Today is another pretty choppy day. We're kind of trading within a range here. We got some news to catch up on. We got some Boeing news to touch on, some Trump speaking points to touch on. But before we get into all that, Gus, how we doing today, brother?
Doing good, hanging in. Yeah, we got no shortage of news today. It was quite the news day. I have traded this Boeing news. We will get into all of it. But yeah, I'm hanging in. Is the short answer. Been running all over the place. We're doing promo for our wonderful events in London and Milan. If you guys happen to be watching from London and Milan right now at 11:35 p.m. local time, maybe go to bed. But you should also come check out the show, man. Tom and Tony, they're world tour.
Yeah,
you guys gotta come
for a little bit. Yeah. Oh yeah. No doubt. I hear you were touching. You're getting involved with Boeing a little bit today. I know we got that pretty big gap down. We'll get into the platform here in a little bit, but goodness gracious, did you see that video? I didn't even know if it was real at first. We're in that day and age.
Yes.
So I was scrolling.
Yes, we are.
So you know what's funny? Before we even get into all of that, I was scrolling on social media a few days ago. Some of these AI videos are so good. Gen Z humor. Some of the comments in Gen Z humor got to be top tier. Like, no joke. Some of the intelligence behind certain jokes takes such an intelligent mind to even think of. Like, you'd be so surprised keyboard warriors be having the most funny things to say sometimes. But anyways, some of the AI videos are so good. Some of the comments, the Gen Zers are saying like, yo, I'm definitely getting scammed when I'm 40. And I just think that's so hilarious because we're the generation that's like, so we don't get scammed. We're so tech savvy, this, that, and the other. And we see a piece of technology so good. We're like, oh yeah, I'm getting scammed when I'm 40. I'm getting scammed when I'm 50. So I don't know, this AI is getting crazy. I don't know if it makes a case with the blockchain, but I thought those comments are hilarious.
Well, yeah, it's the same logic as like what people will say about cults. Like if you think you could never get sucked into a cult, you're the perfect target for a cult. And it's a very similar situation with AI and these scams now. The videos are getting crazy. This Google VO3 is nuts. I've been seeing so many things that are crazy. Like I saw one the other day where it was like actually a guy like vlogging, walking around on a cruise ship as though he was like holding his arm out with the camera, and it looked so good.
Something like that.
Yeah, it was not super PC. I won't elaborate further if we saw the same one, but and then also the pictures now are insane. I actually just earlier today I saw a picture and I did not realize it was AI until I went to the comment section. I went to the comment section to figure out why the kid was crying in this picture because it seemed to be like a happy thing that was going on. It was like a kid sitting at a table with an art project that he had just finished that he was going to turn into school tomorrow or whatever. Obviously it's AI, but I really didn't realize. I would have just thought it was just a real picture that I saw scrolling through, and it wasn't until I went to the comments and I saw people mention it that I noticed if you zoomed in real close on the scissors on the table, they didn't look quite right. But it's like, it's getting crazy. And I worry about my parents and about my grandparents. I mean, I worry that somebody could, I mean, I'm here doing this public facing thing, as are you. Somebody could, take my voice and do whatever they want with it. So it's really scary these days.
No, 100%. So a few weeks ago too, I was around some family friends and things like that. Met some people, they had kids. And they had a younger son. I think he might have been maybe 8, 9 years old, maybe 10, 11 years old. But he had shown me this picture on his phone, and it was this digital photo of this cat. And he was like, look how real AI looks. And he was showing me this, like, you can't even tell. And I'm like, in my head, I'm like, that is clearly, like, that is no question. That clearly looks like a digital cat. But it's even crazier that, certain AI is even fooling the younger minds. I had to humor him a little bit, like, oh, wow, yeah, AI is getting crazy. But it was just crazy.
He's not watching right now, damn.
Yeah, no, I know. I was like, it just blew my mind. I was like, I know younger minds are more susceptible, right? I mean, 8 years old, 9 years old, you're going to have a more of a difficult time to tell what is real and what's not. But if we're getting fooled by things like that and we have a fully developed frontal lobe, just imagine kids' brains that aren't even fully developed yet.
Yeah, I think anyone that grew up around TV, I mean, anybody that's grown up in the last 40 years or so, there was a point in your developmental life where you couldn't really conceptualize the TV. Like I remember being like 3 and 4 and thinking that these things were like actually happening behind the TV, or like I didn't really know what was going on.
True, good point.
And so when your brain is at like that level of processing power, you're obviously super susceptible to be fooled by these AI things. Yeah, it's very scary. It's getting crazy out here.
100%. We'll dive into the platform here, and we'll check out Boeing first. What was your initial reaction off of that, Gus, when you'd seen it? Did you think it was AI right away? Did you want to look more into it? Was it just another plane story? What was your reaction like?
No, never thought it was AI, partly because I've been so conditioned to, I guess, negative Boeing news in the last few years. But 100%. It never crossed my mind that it might be AI. I did see perhaps the most interesting part of this story, which people don't seem to be acknowledging, is that the one survivor jumped out of the plane, which is crazy to me.
Oh, really? So I saw the one survivor. I had seen him walking away, but I didn't know that was a story. Did he walk away?
Yes,
he jumped out.
He was sitting in, I believe, 11A. It was an exit row, and he jumped. And he was the only one who lived through this somehow, which I don't even understand how the mental calculus you do to figure out that you might have a better chance if you jump. I feel like it's a panic response that just worked out. But yeah, I think that's one of the craziest parts of this story. The trade that I have put on, I basically just sold some premium back to the upside here, pretty much right from the bottom. I mean, this was very early this morning, maybe 9 a.m. Central. But I just trust that people are going to overreact to these things. And with Boeing in particular right now, I love playing these overreactions to Boeing news because we don't know anything about this yet. It could come out, they could say that the pilot was drunk, that they didn't do proper maintenance on the plane. There's all kinds of things that could be not necessarily Boeing's fault that could play into this. And even if it is Boeing's fault, I feel like that's an accurate move to price in one plane going down. And I want to say, my dearest condolences to everybody who lost their lives in this event. We sit here, we talk about things in a market context. This is obviously a horrible thing. But yeah, I just felt like it was an overreaction. I feel like the market likes to overreact to Boeing news. So yeah, I just went short put spread to the upside. I sold the 195, bought the 192.50. They were very, very cheap. I bought a number of them to even get some solid equity into this position. But yeah, feeling good about it. 195 would be another continued down move. These are 0 DTE now. Basically, they expire tomorrow. So yeah, just super short-term thing. If we stay above 125 until close tomorrow, I'll max profit out on those. But yeah, I expect the market to overreact to the slightest Boeing news. And so when I saw major Boeing news this morning, I was all over this one to the upside.
Yeah, no, 100%. I like that. It is kind of surprising from a technical perspective too how resilient Boeing is to this news. I know, like you mentioned before, we're getting a little conditioned to hearing these news topics about Boeing flights crashing, flight issue, whatever the case is. But I mean, for a plane to crash with so many fatalities too, I mean,
and so close to takeoff as well. I mean, like immediately after takeoff.
I've never seen anything like that. Yeah, no, I've never seen anything like that. I know I was, the comments isn't the best research, but I do know I was hearing some takes. Was the plane stalling? What was the case? I'm interested to hear more details that come out, but I've never seen the plane take off and dangerously high, but not low enough to where you can cause some serious damage if you don't stay above the ground. But I've never seen a plane crash like that before. But again, from a technical perspective, I would have almost thought Boeing would be down even more considering what happened. Because again, it's not like we get plane crashes every day. I know we hear a lot of horror stories about planes lately, especially in the media, but I mean, we really don't see planes crashing like that every day out in the sky. So I'm interested to see how this is going to digest, because it seems like an underreaction to me, at least on my end. I know it looks like a little bit of an overreaction, but it almost looks like an underreaction considering the magnitude of this event. So
yeah, it's interesting. Mike, maybe the door fell out. Maybe the door fell off and he was sucked out of the plane, and then it also happened to crash. That's insightful. We do know that to happen. Yeah, and I'll say too, I've sat in this chair before and complained about how much the media loves to report on anything and everything Boeing ever since the Alaska Airlines flight where the door blew out. And that's true. This absolutely does not fall into that category. This is a very large scale, yeah, like you said, high magnitude catastrophic thing. This absolutely should influence the market, and I'm not surprised at the sell-off we saw this morning. I'm pleased with the continued buying back that we saw throughout the day today, however small, for the purpose of my trade. But yeah, I don't know. I think I like it though. And a lot of my line of logic with this trade too was that I just simply think it will be next week before we actually figure out what happened. These investigations take a little bit of time, so I think that before any more like this is definitely Boeing's fault news could kind of break, hopefully this trade will have already expired and I'll just be out of it. I really don't like trading Boeing in general, but this was an attractive spot.
I know. How high was the plane when he jumped? I'm not sure how high the plane was when he jumped. I'm not sure if you heard details on that, Gus, but I do know, if I'm not mistaken, the plane was around 290 feet in the air. So that's not super high up, but I mean, that's high up, obviously, to do a lot of damage. So when he jumped, who knows? I'm curious to know, did he pull the latch? Like, did he choose to jump out of the plane? I know I've seen people talking about,
I have the story here. Yeah, he was sitting next. Okay. He was sitting next to the emergency exit, and he chose to open the door and jump out. He told media he's a British national, was traveling with family to Britain. Let me see this. Oh. No, yeah, okay. All Reuters is reporting is it is not clear whether he managed to jump out before the plane made impact. So they're saying it might have been after he jumped out.
Okay.
Which is interesting.
We'll see as more details come out. I think the underlying itself is probably waiting for more details to come out before it decides on where it kind of wants to go. So, I mean, huge story right now. So we'll be looking out for that. Yeah, good on him for some situational awareness.
It is supreme situational awareness, but that's what I was getting at. Is if you're in your plane seat, I don't know how you could possibly deduce that that's your best move. I mean, I guess you know that you're in an urban environment and you haven't gotten far enough. I mean, if you're going to hit a building, it's going to be bad. Like, you need a field or open expanses to like properly, crash land a plane and have there be some survivors. So I can understand like scaling out that gravity, but you don't see much out your plane window. I'm confused.
Okay. Well, a really good point is being brought up. He jumped without his family. Okay.
He was on his way to see his family. Was their family
on his way to see
in the plane with him? I'm not sure.
I'm not sure of the details, but I will say
no. He was with his brother. His brother was in the plane.
Oh wow. Maybe it's just a response. So I don't know if you heard not too long ago. There was a young lady going paragliding. Did you hear about that story?
No. Oh yes, she had an anxiety attack and like unclipped herself. Yeah, I saw that.
She unclipped herself, right? So it's like from the outside looking, it's like, why would you do that? That doesn't make any sense. Maybe it was just a response, a fear response.
Well, yeah,
you know what I'm saying. So
that's all I can deduce is that it was just a pure panic response and not thinking clearly. He was like, "Here's this door. I'm gonna take my chances before this plane hits the ground, or maybe after. I don't know. I guess that's unclear at this time." But yeah, I think that it was just a flight response that just happened to work out really well. That would almost never be the right call, but it worked out in this case.
It did. So, I mean, we'll swing it back around to that story whenever we get more details out. American Airlines gapping down overnight. United Airlines gapping down pretty much just as much. And then Boeing taking the brunt of the hit, obviously, because of the plane going down there. But we'll see if these will rebound. Let's take a little bit of a higher time frame perspective on American Airlines and United Airlines before we pivot here. So these are getting hit a little bit. I mean, they weren't really doing too much since then. They've kind of been selling off since the beginning of the year. Trying to rally since, and we kind of just been trading within a pretty small zone, so I haven't been too volatile on this end. As for some of the other positions, again, SPY, this market has been really boring. I don't know if you have any thoughts on this overall market, but the last few days, I feel like it's been really choppy. I feel like most of the directional moves have been put in overnight, which, leaves, market open until we close kind of dead. So that's kind of what I've seen. I know Trump was speaking earlier today. I know I flipped on one of the channels today, and I know he was speaking live for a little bit. So even when he was speaking, we really didn't get too much volatility in the market. So that was a little surprising too. Even yesterday, we had some CPI numbers an hour before the bell yesterday. And the market kind of still feels like it's deciding on what it wants to do. It feels like it's in that limbo phase where one side of the market is trying to see if we're going to go to all-time highs. The other side of the market is prepping for a down move. That's kind of what it feels like. That's like the two sentiments that it feels like it's flipping back and forth from. And it feels like right now we're kind of at that pinnacle moment where we might shoot up to all-time highs because we're so close, or this could be the start to maybe a decent down move. So outside of that, nothing too exciting on my end, Gus. I know we have the SPY position, 9 days left to expiration. NVIDIA, 9 days left to expiration. Both of these can't really do much about. Unless the market wants to gap down and continue to sell off, put some legs into the downside, then we can recoup some of those positions. But even looking at this, right, we're on the daily chart. I mean, this is some pretty choppy action. I mean, not much is going on here. If you sold some premium on this, I mean, premium sellers are definitely winning in these moves because we're trading within a very narrow range, and the value of these contracts are just seeping out very slowly. So not much going on in there. Same story as the SPY position. Disney, we're getting a little bit back on Disney today, but not too much. Disney's been going on an absolute tear. So that position has some time to work out, but not looking too hot in there. And then we got the micro NASDAQ position. We're short on the overall market right now. So this is what I got in here, Gus. Nothing too crazy. I'll manage this if the market decides to run to the upside tomorrow, maybe, but I do have a short position on. And if we take out maybe today's highs, I'll look to start managing it, but we'll see how that one's sitting overnight. Other than that, that's what we got going on. The market's just been a little bit boring on my end, at least. I mean, the choppy price action has been like watching paint dry. It still feels like something's brewing. Volatility index, I'm still waiting for that to pop, but it looks like it's coming. As each day gets closer, Gus, we got to be closer to a big spot. So we're hopeful.
Yeah, I think you hit the nail on the head with at the beginning there. It has been choppy. The moves come after market, and then we kind of establish ranges in like the first hour or two of the day every day, and just stay within those ranges, bouncing around for the remainder of the day. I absolutely agree. My portfolio is a bit more exciting at the moment. We got things going well. I have where to even begin here. It's so funny. We never show my portfolio. We can hop over here if we want to go ahead, but it's a sharp juxtaposition to the way that Errol's portfolio always looks nice and organized with just like 3 to 5 positions. I'm always spread out pretty hard, but I have let's see. I guess we'll start. I have 3 things expiring tomorrow. I do have a Tesla trade in here, you will notice. I went short a put on Tesla way at the bottom. It was like the day, I guess all that stuff, the Trump Elon stuff happened a week ago today. So yeah, this would have been like Friday morning. I went ahead and shorted a Tesla put. I think the lowest it ever got was 240-ish. Let's see, not even. Oh no, this is days. Yeah, so am I tweaking? What time frame am I on right now? Today is the 12th, so I'm looking for the 5th. Okay, yes, I was correct right here. So yeah, 277, 275 is about the lowest we ever saw on Tesla. Right when we were like, it was pretty close to those levels, maybe 280s. The premiums were just so insane with the way that it was taking a nosedive, so I was compelled to go ahead and sell a put, and that looks like it's going to work out swimmingly. Additionally, I have this short Chewy position, which I mentioned earlier this week that I put on ahead of earnings. Worked out very well as well. Nice gap down. It actually made the equivalent move downwards that it would have taken upwards to bust me. So I was a bit ambitious with my thoughts about this thing isn't going to move very much after earnings, but fortunately it moved the right direction. And then yeah, as I mentioned, I have this Boeing vertical on. I got that on this morning. So that's everything expiring tomorrow. If you look at the probability of profit section here, I'm feeling pretty good about my positions expiring in the next 3 weeks. And then, yeah, moving beyond that, Procter & Gamble, this one's been frustrating. This thing will not move. I think it has good upside to it, and that's the trade that I'm placing. But, yeah, plenty of time left on that one, but would love to see Procter & Gamble get over 170. And that's pretty much the only thing that I'm keeping up with in any sort of depth. This is the QCOM position that I've mentioned a few times. We were over 160 briefly. Now we are not, but I have gotten nice appreciation on both of those contracts, so holding firm on that front with 36 DTE on that front one. And yeah, that's pretty much all the exciting stuff. Got my VIX hedge, perpetual VIX hedge, Match.com, which I've talked about before. Got shares, got a vertical there, which is also doing very well. 97 probability of profit on that one. So sitting pretty, mostly long delta still, but I have slowly been trimming out of things. I've been slowly trimming off some of these shares. I've fully closed my Apple and Google shares positions earlier this week. Just kind of trying to brace myself here. I believe Lone Sophos has said before in chat, all-time highs bring all-time resistance. That's a quote that I like, and it's true. As we near all-time highs here, I just want to get a little bit more delta neutral as long as I still am. But it's been crazy. What were you gonna say? Sorry.
No, I was just gonna say. I mean, I really like it. I mean, we're really inching towards that all-time highs too. So I mean, if we do end up getting that pop, it almost feels like if we put in one more leg to the upside, we're going to be rounding off all-time highs. So your portfolio is going to be looking really nice if we end up doing that. So, I mean, I hope we do see that for your.
Yes, and trying to do that dance that you just described of striking a balance between wanting to still be long delta in the event that we do make all-time highs and kind of break through that and test some new territory out, but also wanting to be prepared in the case that we just bounce off of all-time highs and start to move back down. So yeah, it's been delicate, but feeling good.
No, 100%. But since you're leaning so long delta too, your position's so nice because if we do get all-time highs, you could take off 4, 5, 6 positions. Feel satisfied and comfortable with that, and you still got some long delta going. And then at that time, you even have a larger cushion. So honestly, I think you're positioned pretty well. I really like your standings right now. So
yeah, exactly. It's just especially as we've creeped back a lot of this. I mean, I got so long like at the bottom, which was the right thing to do, and I think that most tasty people were thinking the same way. Yeah, mid-April around there. So started to load things at that time, and now we've had the V-shaped recovery, which is almost complete. We're pushing towards these all-time highs again, and so it's just now I'm just starting to get a little bit antsier. It's also been over 2 months now since that volatility event happened. I worry when the next one might be coming, and in this environment, it can just happen any given day. So as that starts to become a greater and greater possibility in my mind, I am slowly starting to trim out of things and take profits. I've done incredibly well coming out of this, so I'm happy to take my profits here. But yeah, barring something catastrophic, I should be just fine. It would just be if we all of a sudden take a 6% dip in SPX in a single day, that everything starts to get a little bit dicey for me. But fortunately, got a nice cushion of profits sitting there too from the run up. So it's a nice balance.
Hey, we take a 6% dip in SPX. I'm cashing out on SPY and NVIDIA tomorrow. We do that. So
you're rooting for the 6% dip on SPX. I know you are.
No, I know. I mean, 6% dip on XPX. I think we see high 50s in the VIX, something like that. If that happens in one day, but either way, no. VIX is looking like it's waiting to pop. It's been really quiet. I mean, I know VIX hasn't popped yet, but I mean, I feel like that's even a testament to how these few days have been in the market. You know, I mean, we haven't even really gone down too much on VIX. We haven't gone down too much on VIX. Market feels like it's just waiting for something, whatever that may be, tariff news. You know, whatever the case might be. But it does kind of feel like, you know, we've been waiting on a lot of the tariff news, but the market doesn't feel as sensitive right now to any type of like tariff headline. I'm sure it would move the market, but it doesn't feel as tense right now. I don't know. Trade tensions doesn't feel as tense to me right now as it once felt, maybe even just 4 weeks ago.
No, I absolutely agree. And Mike, you make a great point in chat where 90-day pause is up in a few weeks. I believe July 9th or 7th or something was the day that we decided that is. We like 3 more weeks. Errol and I, we worked hard to figure out what day it was, and then I don't know anymore.
Every time.
Yeah, but for like first week of July, basically, is the thought process. But yes, Mike, you make a great point on that front, and that's actually something that I'm going to start attacking early next week. Is really diving into research, because Liberation Day was so nuts. There's north of 100 countries that are getting tariffed, including like Antarctica and everything. And there's been a lot of resolutions made, and we've made some headway with China, but we're not all the way there, and it's all kind of been nebulous and confusing and hard to keep up with. So I'm going to early next week begin researching and start to kind of have a more definitive stance on what I think will happen after that tariff pause is up, kind of how that all looks. It's obviously a highly important thing to game out. So yeah, that is on the forefront of my mind, and I'm unsure of what is going to happen. On one hand, if we, you know, as that deadline creeps closer and closer, if we all of a sudden reach a bunch of resolutions, suddenly that could be like this pressure that's been on the market this whole time, even amid this recovery, is lifted and we go higher. There's all sorts of angles that could happen here. So yeah, Liberation Day tariffs on the forefront of my mind for sure.
No, 100%.
Oh, they extended it another 90 days for any country that didn't retaliate? That's news to me, Emmett. Thank you. Interesting. I didn't realize that was the case. Okay, well now I got to find a list of countries that didn't retaliate. I don't even know what that means. But I'll tell you what though, something I am really looking forward to trading into that cycle is the country-based ETFs. They have them for pretty much all major economies in the world. That's a really, really good way to get just some sentiment exposure towards these things, because when the tariff situation is it's very far from black and white, but in the case of these individual country ETFs, like I talk about yin and yang a lot for China, if you're going to get yin, you know, that's long 3x long China shares, the market will react accordingly to whatever the tariff news is for all of these different countries, even if it may not be a justified reaction. That is the way that the price tends to move. And I made a lot of money on Yang, getting long Yang, which is inverse China ETF, into Liberation Day. So there's a lot of attractive angles. Volatility is always good. You would rather trade in volatility.
Yeah.
So we'll
100%. Volatility is a trader's best friend. No, it's a really good point. I mean, with so many tariffs going out, so many different deals with different countries, I mean, you're right. There are specific underlines that you can get a little bit of that sentiment exposure to. I think you laid that out perfectly. Anything else before we wrap up on here today? It looks like the Pacers got the best of OKC for game 3, Gus. So, I don't know. Maybe it's Halliburton's time. I don't know. Shy.
It might
MVP.
be.
I don't know. We'll see what we get.
Halliburton hasn't shot a free throw in the month of June, man. It's ethical basketball.
I've seen that. I saw that stat today. Is that ethical basketball? I mean, that's a complete polar opposite of what's going on with the MVP right now. So take from that what you will. But anything else to add before we hop on out of here, guys?
No, nothing else. I said at the beginning of this series that if Indiana won, it wouldn't surprise me. They've been surprising everybody this whole season, and here we are. So yeah, let's see if the Pacers can bring it home.
All right, we'll see what we get. We are wrapping up with some time here. We will be circling back here next Tuesday at 4:30 Central Time. But be sure to stay tuned for more segments coming on next. And we'll catch you guys next time. Peace.
Oh, yeah, it is Thursday, June 12th, a little bit after 5 p.m. Central Time, the best time. You know what that means. It's time for Tasty Live's evening show, a little podcast. a little podcast. You were a little podcast called The Price of Truth, the show where we like to explore the incentives that govern our world. Shout out to everybody watching on tastylive.com. Shout out to everybody watching on Tasty Trade desktop and mobile applications. If you don't already have both, go get them. But if you want to be part of Bing, this little chat box on your screen, there's only one place you can do it, and that's on the evil Google YouTube. So head on over to YouTube, find the Tasty Live YouTube channel. There's too many YouTubes there. Find the Tasty Live YouTube channel, subscribe to the channel. That way you can stream your thoughts, both appropriate and otherwise, right here on the screen. There's no moderation. I'm just kidding. The producer's like, stop. Will you stop telling them to put crazy things in the chat and making my job 10 times harder? Speaking of the chat, I should say what's up to the chat. Shout out to everybody in the chat. I'm looking at you, Lone. What's up, Brian Watson, the YouTube goat? Emmett Morrison, how are you? Brian. Donna Ski. Catan, how are you? Sunflower. Hey, Victor Jones, you're in Singapore, right? Why does the market fluctuate so much during evening hours? Is it because the news cycle varies so much per country? There's really just 3 market cycles. There's a U.S. market cycle, sort of window of time where U.S. liquidity is what matters. There's an Asian market window of time, and there's a European market window of time. So you're basically just tracking those 3 areas. Each can have its own dynamics. Risk in many ways, the beta of risk of U.S. markets, in particular futures, can react to U.S. and European liquidity dynamics and vice versa. So I think we're in a period of time where geopolitical concerns, trade concerns amongst the different countries can have major impacts. Therefore, all 3 markets are fairly sensitive to each other. I suppose that's the way that I would lay it out. But I would also say there's been sort of this familiar pattern with a lot of this little march higher in U.S. markets. And the familiar pattern is most of the time you come in here and markets are open, your futures are down like 0.5%. You know, it's very rare. I mean, somebody could do the analysis. I just watch this stuff anecdotally. But it's very rare over the last, I want to say 3 weeks. I want to say at least 60% of the time, equity markets open, you're down 0.5%. And generally you climb a little higher by the end of the day. So, I don't know that I personally look at it like it fluctuates so much overnight. I suppose the right mental model, this may not work in the future, the right mental model is every morning they give me a discount. That works until it doesn't. Shout out to, Sunflower, you got me going already. Usually I like to do, a little, I like to talk a little bit up front, okay? Don't like to get straight into the wham, bam, thank you, ma'am of the show. Carlos, how are you? Grumpy Mike, John Steen, JDD. Wow, we got the whole crew in here. What's up? Mark and all the rest of you. I see you. I appreciate you. Damn it, I love you. I'd reach through the screen and give you a big old consensual hug if I could. Emphasis on consensual. Let's, what do you say we get going, people? Another day, another day, and markets grind ever so gently, ever so daintily. That's the good word. Somebody give me a really good word for just how lightly the market is floating up higher each day. 0.5%. Plus or minus 10 basis points is what you've been doing almost every day, man. And you start down 0.5%. So from a trading perspective, it feels like you're getting a 1% swing. If you're just trading equity cash, you're getting about 40 to 60 basis points every day. Congratulations. You having fun? You having fun with this boring ass market? SPX, much more happening under the surface, I suppose. SPX up 2/5%, excuse me. The NASDAQ up 1/4%. The Dow Jones decided to move a little bit today as well, up 1/4%. And the Russell, because small businesses will not survive, are down 2/5%. It was ugly this morning. Russell was down like 1% at one point. I think the NASDAQ at worst, as well as the S&P, were down about 0.4% prior to the open, is what I saw. Then there are the midnight tweets. Yeah, I don't know what time it was for you guys, but yeah, there was the tweet that came out of President Trump's Twitter talking about tariffs. I forget what exactly he said, but just a bunch of nonsense. Trump said he will set, where was it? I just lost it, sorry. Trump said he will set unilateral take it or leave it tariffs on trading partners in the next 2 weeks. And that came out about 12 hours ago. So that was pretty early this morning. The markets were already a little weak, but only by maybe 20 basis points. That probably doubled it. So yeah, the late night tweets, probably not a bad reasoning here either. Levitating, I like that. Catan says, ever so gently sauntering, Brian, with a little bit of thesaurus work out there, doing God's work. I appreciate it. Tesla did sell off. Tesla was weak today. Down by 2.25%. I think the apology rally is over, and now he's got doesn't he have that robo-taxi thing coming up? Robo-taxi announcement or release. Now I think he's just got to put up or shut up. But he'll come up with something. That's the world's greatest huckster. No shade. He's just really, really good at talking his stock price higher. I don't know if there's much to do there anymore. I think it's just a coin flip. Whenever he's able to convince the market, if he's able to hit is it the June 22nd date? June 22nd or July 22nd is his next big robotaxi announcement. So I would expect I don't know. Market doesn't really look like. There's a little kink involved here. Is it July 22nd? It must be. Because if it's June, the markets don't care at all. So it must be July. Somebody help me out with that. I should know that offhand. I don't know it. I don't want to misinform anybody. So if you know the date of his next his robotaxi announcement or release or whatever, you just do me a favor and drop it in the chat. But 6,037.50 on the S&P, still floating below 22,000 in the NASDAQ. Grumpy Mike says, I bet he has his 50th kid before the robotaxi is made available. It's good work if he could find it, I suppose. VIX, 18 and change, a bit surprising. Because if you think about it, the Rule of 16 says that an 18 VIX is something like a little bit more than 1% move, 1% expected moves on a daily basis. So 4 points, it's like a quarter. It's like 1.125%, I think. Is what you should expect on a daily basis. At least 2 out of 3 days, you should be getting that type of range, and maybe even 1 out of every 3 days you should be getting outside of that. And I don't think we're coming close, man. I don't think we're coming close right now. So vol at 18 on a relative basis, we came from being above 20 and in the 40s and spiking to 60, it feels low, but relative to realized vol right now, realized vol is on the floor. You know, it's on the floor for the last couple of days. If you're using just cash markets, again, the swings from low to high are a little bit greater than that. The swings from low to high might reflect an 18 VIX more appropriately, but on a close over close basis, realized vol's on the floor. Let's keep going here. We did get our move. June 22nd for the robo-taxi, says JDD. Thank you. That's wild because the option market doesn't care. Am I crazy? Should we not see a little elevated vol in the series where unless the market doesn't believe he's going to make that time, unless they think he's going to push it back. But this series, if this was important to the marketplace, should have a bit more elevated vol. I guess it's 5 points higher. But then the next week is 4 points higher than that. Strange things with Elon. I guess it's hard to pinpoint Elon, you know. So you got to spread the vol amongst the 2 weeks and just and prepare for the idea that he delays it by a week. Maybe that's what that is. We got our move. We got a continued move in the 2-year. So we got down to like 39 basis points. Everybody, we had said, I'm sorry. I'm getting over this. That means that I'm going to have the most congestion right now. And so hopefully when I come back off the break, I won't sound like a lounge singer from the 40s. Just smoking cigarettes and hacking on a microphone. ZT, we got a nice little rally in the short end of the curve, which means, you know what that means, my babies? Means our little bet that once we started to get close to one cut for the year, the thesis was that was probably, and they weren't really, they only rotated like one cut to the back to next year. That was probably an interesting place to start taking bets that will move the other direction. Because either you have to believe that they're going to get to neutral and say, okay, we're taking all cuts off the board once they get to like Jackson Hole, which is totally possible. That is very, I would say that's total live probability. I'd say that's like, maybe it's a 30% chance, maybe higher, but I'd price it about a 30% delta. And the rest, I would say, is they keep playing this extend and pretend game. They keep delivering and sort of talking markets off of cuts in the short term and then sort of placing them out a little bit further in time. And to some extent, I think that's what we saw here. So September still on the board, 93% probability in the aggregate that we ended up with a move there at the first with the first cut. And markets can't really figure out when the second one's coming. But second one right now, let's say, is in December. So it's now fully priced, that second cut. So we went from like 39 basis points into fully pricing that second cut. So it was a pretty good bet. I mean, there wasn't a ton of money to have been made here in ZT unless you just levered up. But we're starting to move the opposite direction, away from moving towards a single cut to no cuts for the year, and starting to move back solidly into two cuts. So I don't know that there's much edge here. With only 6 months left, two cuts price, that seems about fair. And I think my guess is we'd stay in a pretty tight range from here on out, unless something radical happens with the data, or they choose to pivot. They choose to use Jackson Hole as an opportunity to pivot into a more neutral stance. Barring those things, I could totally see us staying here for a little bit of time. You give them enough time to get all the way to September. That's a lot of data to see between now and then. And depending on how that data looks, that allows them to either cement 2 cuts for the rest of the year or move off of it. If the inflation data stays sticky or even reverses to the upside, and if claims start to move aggressively higher, or the employment picture changes, I think that helps them to firm up the 2 cuts. And if they don't see those two things, I think even 2 cuts could be unlikely. We could end up with 1 for the rest of the year. I think no cuts at all is still a live probability. Like I said, I think that might be in a 30% ballpark. Let's see here. Let me read some of your guys' reactions. Video feed a little glitchy. Is that so? Apologies if so. Let's see here. There's no edge in 0 DTE SPX options. The deltas are spot on and the options are perfectly priced. You end up flat over time. Interesting. The only time I bet 0 DTEs is on big moves. It's just a way for me, it's just a way to fade them intraday. And it's basically a leveraged directional bet. I don't use them every day. I'm not selling them. I just use them as flyers on big moves. Brett says, oh wait, I'm right. There's a reveal on June 12th, which is today, and they start driving on June 22nd. Is it going to be driverless though? Because robotaxi and driverless car is different. I've kind of I don't know, some part of me is dead to that whole narrative now, Fool me once, shame on you. Fool me twice, shame on me. Fool me 20 times. Bro, do you know how many times that robotaxi carrot has been dangled out in front of the investing public? And I think that, that's the sort of the boy who cried wolf in reverse, because what will happen is when you actually see it, it's probably not going to be discounted to the extent that it should be in Tesla's price. And people may have to play a little bit of catch up, or at least the retail space will. Robotaxi, see here, Grumpy Mike's about to throw down the hammer here with this one. Robotaxi was first announced in 2016 as part of Elon's master plan part 2. Then it was talked up again in 2019, Autonomy Day. I seem to recall it was always going to be available the next year. See, Grumpy Mike is now, Grumpy Mike has just wrapped up the jaded nature of the investing public when it comes to robotaxi from Tesla. Oh, man. I think the plan is to use the Model Y initially, not the little 2-door CRX thing. I think so, too. So it's like a robotaxi with a person sitting in the driver's seat, just not driving. Is that kind of what's happening here? I don't know. That might be a bit of a dud from a marketing perspective. But you know, fake it till you make it, baby. Fake it till you make it. I don't think I need to refresh my yields here, but bonds, we're back up to we're back up over 114. So like I said, I think 114 has become this new point of control. So I don't know, maybe you look at the range as 114 plus or minus 4 points. Maybe 117 is not out of the cards. I don't know why I'm holding out for this low probability outcome. But I doubled down. I don't double down, but I added to that my one. I basically just to know how stupid this bet has been. When bonds flushed to like 109, I didn't do this at 109. I think we're in the ballpark of 110, maybe 110 change. I bought some 117 ZB calls outright. I never do this. I usually sell something against it to help pay for it. I almost never buy outright calls. But I bought the 117s a few cycles out. So this is like the least strategic trade that I think I've done in a few years. Yeah, so I'm just sitting on these things. I added a little bit today, earlier. We'll see what happens. It's most likely going to be a big time loser. It's up a little bit. It's up a little bit as of now. On a percentage basis, it's up a decent amount. And I'm just, if we can get close, who knows what these lottery tickets can do. Every once in a while, a guy's got to buy a scratch off. You know what I'm saying? So that's the bet. And I think there are way more strategic ways I could have played this. I'll be 100% honest. But sometimes I get greedy and I just go for it. The market has to remind me of very simple concepts like theta. And why buying pure extrinsic value is not a great play over time. But it's okay. We all hard-headed. We need to learn those lessons. Who knows? Maybe I get lucky and then I go, whew, made some money. I'll never do that again. Crude started its little fade here today. I'd say it held in. It looked like it wanted to break. We retraced like almost 50% of yesterday's move before closing somewhere around 30%, 33% retracement in that ballpark. But the fade begins today, which is sort of interesting to me. I wonder, when it comes to the Israel-Iran geopolitical risk thing, I'm not an expert, and I try not to. Twitter's kind of this place where a bunch of people will read a few tweets by experts and then presume to know something, and I think doing that really gets you in trouble. So I try not to do that, and to the extent possible, I'll be honest, when I feel I have nothing of value to impart on a room full of people, because I assume you guys are all really smart, I know you guys are. I know there are incredibly brilliant people here with incredibly brilliant professions, and you can spot a phony a mile away. So anyway, my point is, I'm not a geopolitical expert on the tensions, the rising tensions between Israel and Iran. I'm doing my best to try to stay informed, so I don't think it makes sense for me to talk in depth on that particular issue. It's clearly having an impact into risk premium in crude oil. There was some additional strategery that played out between the U.S., Israel, and Iran today, with the U.S. saying they would not participate in any strikes in Iran. But other than that, I had said I liked the idea of selling elevated vol in crude oil up at chicken shit levels, up at 78, 80.